Because I thought that if you go to school, get a good degree, you can make a lot of money. And if you work harder in school, get better grades, you'll make even more money. So I thought it was just directly correlated. Your grades, your income. And that's when I started questioning things. And I realized, oh, maybe this isn't right. And as you start to go down deeper and deeper down the rabbit hole, you start to realize, oh my God, everything that I've been told is a lie.
Your channel is really inspiring, and you've interviewed and also just done your own research individually on a lot of these different topics about money. You've interviewed the top people on Bitcoin and cryptocurrency, investing in gold and stock trading and real estate and starting your own business and all these different things. With all the information that you've brought into your life, all the mistakes around money, the successes around money, the wisdom you've learned, the things you've tried, maybe the things you haven't tried.
Yeah.
If you could share 5 things you wish we all taught when we were younger about money.
Yeah.
With all this information that seems a little overwhelming and confusing, especially today with the NFT world and the crypto and all these different things. And what do you wish we taught everyone from the ages of 10 to 20?
Sure.
5 different things around money.
First thing would be, what is money? Because money, as we know it, is fake. Our dollars are just pieces of paper. I grew up thinking that our paper dollars are like the holy grail. You want to save this money because it is the most valuable thing there is. As I became older, I started to realize that that's not the case. Our paper dollars are just pieces of paper. It's fiat currency, which means it's issued by the government, and the value is backed through the strength of the government. Now, we're lucky here that the United States is the world's superpower. We have the world's strongest military. We have the world's strongest economy. But we can't stay on top forever. And inflation is when the value of a dollar goes down. So these dollars, which many of us think that if we hoard this, we'll become wealthy, save your money to wealth, is actually keeping you poor, and it's making you poorer each and every day. So the first thing you have to understand is, what is money? The second thing you have to understand is, what do wealthy people work for? And most of us, the majority of us, are taught to work to get a job and climb that corporate ladder. But wealthy people are doing something completely different. They're working to own the corporate ladder. They're working for something called equity. And this thing really blew my mind, because wealthy people are not working for that paycheck. They're working to own a piece of the company. That way they can get a piece of the profits. So the best way to understand this is, a lot of times people complain about how much money I'm making. I wish my boss paid me more. And this is where, if you start to understand the system, you'll start to ask the right questions. See, a big company, you have to ask the question, who are they working for? Are they working to take care of their employees? Are they working to take care of their customers? Neither. They're working to take care of one person, their shareholders. It's this concept called fiduciary duty.
Right.
I learned this in law school. The executives of a company have a fiduciary duty, not towards the employees, not towards the customers, but towards the shareholders, the owners of the company. Now, what that means, an easy example of this is, you're going out to dinner with your girlfriend or your wife, and you're on a date, and you get a text from one of your good friends, say, hey, let's go play Fortnite right now. Your fiduciary duty at the moment is to be with your girlfriend, to be with your wife, to be with your partner, to spend time with him or her. If you go out and leave, you're going to get in trouble, right?
Yeah.
So it's, who is your alliance to? And the shareholders, the executives, the CEO and the executives company, their fiduciary duty is to the shareholders, the owners of the company. So what are they trying to do? They're working to drive up the valuation of the company. So once you start to understand that, you'll realize why there's this big discrepancy between what people are paid and what people want to be paid. And when you start to understand that, you're going to change what you do with your money. That's why I said a minute ago, or a little bit ago, wealthy people are working to not climb the corporate ladder, but own the corporate ladder. So how do you get that equity, that ownership? You have to own a piece of the corporate ladder. Now, if you work for a public company, that means now you can take some of your income and you can buy stock in the company. Maybe they pay you with equity. Maybe they give you some sort of revenue share. That's what we do in my companies. Or if your company doesn't do that, then you have to start taking this money that you're earning and you have to start investing it into a place where you're getting equity. Maybe that means stocks, maybe that means real estate. It could be, there's a number of different investments, but you have to work towards that equity.
Yeah.
The third thing is that you have to think bigger. I know I grew up thinking that somebody who looks like me, somebody who's brown, somebody who wears a turban, somebody who didn't have entrepreneur, investor parents could go out and do this. Because you think that somebody like me can't do this. My parents also told me that I couldn't do it. I didn't know anybody doing it. I didn't know any investors. But you have to be the one to take that first step. And once you start to take that first step, you're going to learn and see the second step. Then you take the second step and you're like, oh, I can start $100 investment here. You don't have to start with hundreds of thousands or millions of dollars. Start with $100. Apps on the internet make it so much more accessible.
Right.
But anything is possible. If you live in America, you speak English, you have more opportunities than really anybody else in the world. People will literally risk their lives to come to this country because there's opportunity here. And so if you're here, you have the ability to understand what you and I are saying, and you have that technology to do it, you're blessed.
Yeah.
Now, what do you do with this, right? You have to go out and start learning. You have to go out and start doing. And then the next thing that you have to do, Number four is you have to understand the concept of debt. Because we live in this consumer culture. And it's interesting where we want to live this flex lifestyle, right? I want to show off on Instagram. I want to show off my new car, my new Chanel, Gucci purse. And we kind of get caught up where I need to live a certain lifestyle that way people can think that I'm rich. But what you're doing now is you're living broke.
Right.
Making everybody else rich so people think you're rich. You're product rich. You have a lot of nice stuff, but you're broke. And so when you live that type of lifestyle, you are the reason why Gucci, Louis Vuitton, Chanel are making so much money, but it's keeping you broke. The richest person in the world, sometimes he's the second, sometimes he's the third, is the CEO of Louis Vuitton.
No way, really?
Yeah, Bernard Arnault. And why? How did he get there? Because everybody wants to look rich. Everybody wants the Louis Vuitton. I saw this in the pandemic especially. We were in a recession in 2021, but luxury sale of products were breaking new records.
Come on, really?
They're breaking records in 2021.
Why is that?
Stimulus checks went out, people had cash, and some people used that money to save, some people used that money to pay down debt, some people invested that money, but a big chunk of people took that money to places like Gucci, Louis Vuitton, and now you go and spend it.
You would think when the economy is, I guess when people are losing their jobs and there's financial uncertainty of the future, you'd think people would be saving or investing, not spending on luxury goods, especially if you can't even go outside to flex it. You can only do it on social media in the comfort of your home.
You don't need to go outside anymore. You can just do it on social media.
I know.
And so if you don't have the cash to do it, people are going into debt to buy it, and it's becoming easier and easier because of now things like buy now, pay later.
Right.
It is one of the fastest growing industries in fintech. I love financial technology, but it breaks my heart. I mean, it rips my heartstrings when I see the growth of this buy now, pay later, because what does that mean? I can go out and buy anything I want, not pay for it today, pay it off over 3 months, and then if I don't, I get slapped with 25% interest. And if you are 18, or let's just say 21, I give you $6,500. You never invested another penny, but you invested those $6,500, and you could get an 18% return on that money, and you retire at 65, and you look at this investment portfolio, you would have over $11 million.
Wow.
Now, everyone watching this saying, where the heck am I going to get 18% on my money?
Exactly.
But your credit card company is doing it every single day. $6,500 is what the average American household has in credit card debt right now. And you're turning around paying these companies 18, 20, 25% a year, and they're the ones that are getting rich, not you. So what's happening? You're going into debt to buy liabilities, which are things that lose your money, and then you're paying interest on top of that, which is making everybody else rich, which leaves no money in your pocket to make yourself rich. And you have to break out of that mindset.
So what do we need to know about debt then? How do people get comfortable understanding about debt, either using it in the right ways and eliminating the debts that don't support our financial growth?
Yeah, so the first thing is never finance anything that isn't gonna pay you. Okay, so
give me an example.
Gucci, your vacations, your car, stop financing these things that aren't paying you. And people are gonna get upset when I say your car, because they're gonna say, wait, how am I supposed to buy a car without a car payment?
Don't buy a $100,000 car unless you got the money in the bank to buy it, and plus more. Buy a used car for $6,000.
Exactly. Go buy a used car, good working condition car with cash.
Ride it for 10 years.
Exactly. The first time I made $1 million in a year, my car was $500.
Dude.
My employees had better cars than I did.
I had a $4,000 car for the first 5 years living in Los Angeles. $4,000 car, used car, 1997.
I love it.
Was the car when it was made, and that thing was great. Yeah. And it was comfortable, got me from A to B.
Yeah.
It didn't break down.
Exactly.
I didn't need to be flashy.
Exactly. I still have my $500 car.
That's great.
I still drive, and it's one of those things where, because I fell into this trap, where the first time I started making money, in my culture, cars are a big thing. Mm-hmm. The Punjabi culture, people really want to put money in their cars. They want to look cool, right? So when I was 16, 17, I started making a little bit of money because I was doing my side hustles. The first thing I did was I put new rims on my car. Then I put tints on my car. Then I put HIDs on. I had two 12-inch subwoofers in my trunk, right? I put the tints on. I put a new sound system in there.
Lights around, glow in the dark. Yeah.
I had a Toyota, right? And then the next thing I was going to do is I called up my cousin. I said, guess what? I got $3,000 in the bank. I'm about to put Lamborghini doors on my Toyota.
Crazy, man.
And he's like, Jaspreet, you're stupid. Don't do that. And so he sat on the phone with me for like 20 minutes, convincing me not to do it. Luckily, I didn't. I'm really glad I didn't. But that's where all my money was going. I looked cool. My car was cool. And that's where all my money was going. I had $1,000 in my bank, and I went out and I bought a $1,000 watch. I was like 18 years old, right? Because it was like, I was in that industry, the entertainment industry. I wanted to look cool. And then, I start to read these money books, and my mindset starts to shift. And now all of a sudden, it's I went from one polar extreme to the other polar extreme. I don't want to spend a penny.
On anything.
Unless
it's making me money.
Exactly. I don't want to spend anything unless it's making me money. So now I'm saving as much money as I can. I'm investing my money as much as I can. I'm trying to build my business. And I'm talking like I'm running my shoes into the ground. They have holes in them. I put a piece of tape, wrap it up. I'm going to school. I got rental properties, but I got my shoes that are taped up, right? And it's like, I realized that I'm going to go, I'm not going to make those same mistakes again. Mm-hmm. And you have to break out of that mindset. The first time I made $100,000 a year, I was in school. And I was living in an apartment paying $400 a month, including my water, my electricity, my cable, my gas, my internet, everything.
Wow.
And the reason was because I didn't have a room. I slept on the living room floor. I had a little mattress. I used to pull that into the living room, put that down, go to sleep at night, wake up, fold up the sheets, put them away, drag the mattress back into the hallway, because I'm like, I realized that the power of compounding your money. Yeah. I realized the power of putting your money into the right assets. And I'm like, this is my time to build. I've been blowing this money that I've been earning on things that are making everybody else rich.
Right.
I'll spend money on that stuff a little bit later. Right now, I want to make myself rich.
Yeah.
And so, you have to just first understand what it is that's worth spending money on and what's not. And then, if you do have that debt, you got to come up with a strategy to pay it down as fast as possible. First thing you can do, if you have a lot of credit card debt, call up the companies. See if they're going to be willing to just give you a lower amount. See if they're willing to work with you. Say, look, I got $10,000 worth of debt. I'm never going to pay this off. It's not going to happen. How about you work with me and give me $5,000 and I will work to pay that off. Right? You start to work with them, see if you can do something. Then you can consider moving some of that money to a 0% APR card if you have 12 to 18 months to do that. That way now you can aggressively, you got to do the smart, because if you're just going to keep doing the same things you were before, don't do it. But you have to start aggressively paying it down. You stop spending money. That way now you can pay down this debt as fast as possible, and then you work to earn more money. And the money has to go somewhere as you're earning more money. You live the same lifestyle, if not smaller, and you take all this extra money and you use it to pay down your debt. That way now you can start building, right? You got to lay that foundation. You got to start working to grow upwards, but you have to get aggressive.
Is there ever a time where people should go into debt, the right type of debt? Where the credit card debt, the student loan debt, buying a car and going in debt on that, those things I'm understanding, it's not helping your financial future.
Yeah.
When is it the right time, or is there a right time in your mind to take money out and spend interest on that money?
Depends, right? If it's something that's going to make you income and you can manage the debt, then yes. But it's not for everybody.
Right.
Some people don't have it in them to manage the debt. Some people don't have it in them to manage investments. Some people don't have it in them to run a business. If you're not the entrepreneurial investor type and you don't like looking at numbers, you don't like managing money, you don't like trying to grow this, stay away from it. Now you go up, maybe you can get debt to buy a home, but that's it. But if you are more the entrepreneurial type, you have it in you that you want to grow. Now, if you're using debt, you should only be using debt to buy something that's paying you with income, something that's going to make you more money.
Do you have any debt out right now?
Right now, I do not. I have people paying me loans, but I personally don't have any debt right now. I kind of went through this phase where I have all this real estate, but I have no debt on it. And the reason is because I'm waiting for the right opportunity. I will have more debt.
Really?
Yeah, I'm just waiting for the right opportunity because right now all my real estate is paid off.
You've paid off all the real estate? How many properties do you have?
Units in the dozens, a number of units, but now I'm just waiting for the right opportunity.
And it's all paid off?
All paid off.
So now there's just cash coming in?
It's cash coming in. And you know,
do you still have that $6,000?
I still got that one. That's rented for $850 a month.
That $8,000 place?
$8,000 place.
That's just bringing in $800 a month now.
$850 a month.
Clear and free.
Yeah, you got to pay your expenses, your property taxes, your insurance, your maintenance, your management fees. But right now I have no debt on it. And so now what I'm waiting for is...
And how much could you sell that for now?
Probably 100,000, 120. I mean, I don't know the exact, but something in that range.
It's not bad.
Yeah, I mean, it's crazy because when I buy real estate, I never look at what can I sell this property for. I'm looking for one thing: cash flow.
Cash flow, yeah.
And so this is a big mistake that leads people into a lot of problems in real estate, because when you start buying real estate, hoping that you'll be able to sell it for a higher price in the future, and things don't go as planned, then what?
Yeah, you're screwed.
Now you're screwed. So, you know, for me, I look at one thing: cash flow. And will I be able to see more growth in this area? So I look where businesses are moving, where is money moving to? And then that's where I want to invest, because I know if property prices go up, hey, it's icing. Property prices go down, it's okay. That's like I'm a rent, which is covering my costs.
So what's your goal, right? With the dozens of units, for the opportunity for something bigger, or what's the plan?
Something, it can be anything. Something bigger in real estate, and I'm looking for the right opportunity. But again, my focus now isn't in real estate like it was before. A few years ago, I was heavy in real estate, and I was doing everything that I can there, and a lot more opportunities were there. I bought a property in 2021, haven't bought anything in 2022 yet. But my focus now is building my business, because I see a bigger opportunity there for me than real estate. That's why I'm still involved in real estate, but not the way that I was a few years ago.
Because you can earn more with your business if you put the attention and the energy and the money into building the team and the resources and the technology and those things.
And it's more fun because it's a lot more active for me.
Yeah.
And then, you know, once this gets bigger, then I'll go back to real estate. But right now, like for the last few years, I've been kind of phasing slowly away from real estate as I can transition more into the business, because, you know, it's just more fun for me.
Yeah. Okay, so understanding debt was the fourth thing. What was the fifth thing you wish people learned from 10 to 20 years old about money?
You have to be willing to make mistakes, take risks, and start. And this one is hard, and it sounds simple, but a lot of people that I know, they are so hesitant to making that first investment because what if I do something wrong? What if I make a mistake? What if my investment goes down? And so the simple thing
that's happened to me multiple times.
Yeah, but you learn every time, right? Yeah. It's your tuition. It's your real tuition. And you have to be willing to try things, because if you don't, you're going to get stuck in the game of what if. What if I lose money? What if it doesn't work out? Well, what if it goes up? What if you learn? I have made a lot of mistakes. I made a video on my YouTube channel where I went through my worst real estate deal ever. It was my third property that I ever bought. It was a home in the city of Detroit. And I made every mistake possible. Now, I'm still in college, right? I don't know what's going on exactly with real estate investing. And I mean, I bought the property, and I bought it because my contractor at the time told me that we can make a lot of money on this deal. We'd be able to rent it out. We could flip it if I wanted to. And he was like, don't even worry about getting a home inspection. Now, when I buy a property now, the first thing I do is I get a property inspection where somebody walks through the deal, makes sure, a third party, an independent person, and they tell me anything wrong with the property, in the foundation, in the plumbing, in really anything with the property, so I know what I'm getting myself into. And so he told me don't do that. He said, don't worry, I already walked through. He's a contractor, so I figured he knows what he's talking about. All you have to do is spend $5,500, and I will make sure this property is ready to go.
Wow.
So I said, okay, let's do it. So I bought the home. I gave him a check for half, or maybe $2,500 or $3,000, something around there, $3,000. And a week goes by, Nothing starts. 2 weeks go by, nothing starts. And I call him, I said, hey man, what's going on? Like, I thought we were gonna have this done in 2 weeks. Here we are 2 weeks later and you haven't even brought your materials here. So I got caught up with something's going wrong. And so now 2 more weeks go by, he brought some materials there, he started painting one wall and that was it. And so, I'm getting upset because now it's like, every day that this property is now leased out it's costing money.
Yeah.
And still nothing's getting done. Another 2 weeks go by and now I'm like, okay, look, what's going on? We got to get this taken care of because now we're 6 weeks into this deal. You haven't done a single thing. You keep putting me off. You took my money and nothing's happened. And so, long story short on that, he ran away. He was having financial difficulties. That's why he wanted me to close on this deal because he needed some cash. And now he's gone. So now I have another property that somebody was working on, a manager, and he was having some issues at my property. He was causing some problems. So I figured, he's causing problems there. How about you come work at this property and you need a home. You can live in this home for free.
Fix it up.
Just fix it up.
Yeah.
And so he said, okay. So now I thought, all right, I found a good deal here. I got somebody who'll fix it up. He'll live there, take care of it, and it's going to cost me less money. And so now he's living in this property. And he's like, how about this? How about you just open up a charge account at Home Depot and I'll just go buy stuff and take care of it at the home. I said, okay. So I go open up this charge account. He starts buying materials, not to work on my home, but to work on other people's properties.
Oh my gosh.
So now I'm like, dude, like you're spending my money to go work on other people's properties so you can make double profits over there. You haven't started any work on my home. You're not paying me rent. You have a dog that you're not taking care of who's pooping everywhere in the property. Man. And it's not being taken care of. And so now how do I get somebody out of this home? I got to evict him out of my own property. There's no lease in place. So now we got into all these legal issues of how do we get this person out of the home. We get him out of the home. It took me months to get him out. The property now is destroyed.
Trash. Oh man.
There's crap, literal crap all over the home. He damaged the place, did not take care of it, and now it's like we have to start all over from negative to start fixing this property up. So now we start fixing it. I got a licensed and insured contractor. We're months into the deal. And he wants, I don't know, like a lot more money, at least 10 grand, if not more, to start doing the renovations. And we start digging deep and we start to see problem after problem after problem. So now every cost keeps adding up. Now the home is ready to go. And I'm like, all right, fine. And everybody told me, Jaspreet, don't license this home with the city of Detroit as a rental because nobody does it. And this is, again, after the 2008 crash, Detroit went through its bankruptcy. They were having their own issues, but I don't like to play games. I want to play by the rules. So I said, I'm going to get a license for rental. When you get a license for rental, they're going to send their own property inspectors out to the property and they're going to inspect it and make sure that it's okay. So now the property inspectors come out and they say, I need to lift up the home. So what do you mean lift up the home? They're like, oh yeah, we need to raise the home. I don't even know that you could do that. Apparently you can, and it's very expensive.
Wow.
So I lift up the home. And then we start running the water in the property, and it turns out that the water is not draining to the main city line. Apparently, somebody previously living in this property had poured cement down the main drain. Now, in order to get this property working, we have to bust out the cement in the basement, take out this pipe, put in a new pipe, re-pour the cement, and then these property inspectors start disagreeing with one another. One person says that you need a 10-foot electrical riser. So we make it 10 feet. The next one comes and says, why is it 10 feet? It needs to be 13 feet. I'm like, your first person said 10. And now they start fighting with each other and we have to keep paying for these inspectors to come back. They keep charging me permit fees for everything. If I want to paint the windowsills, it's a $100 permit fee. Change the smoke detectors, $75 permit fee. So this goes on and on and on and on for months. Finally now, we're approved for rental. I was like, oh my God, like this is the biggest headache of my life. We get a tenant in the property, we get licensed, a tenant's in the property, and now we have the license and the property inspectors just decides to go back to the property. They don't tell us. They just go back there. Even though we're fully licensed, they had no reason to go there. They knock on the door, and apparently, we didn't know this, the tenant was having a babysitting operation in a property. So now the inspector sees this, that the tenant is running an illegal babysitting operation. He tells us, he fines us, tells us we need to evict the tenant. And now we have to start this process all over again. So after that point, I was like, you know what, just sell this property.
Wow.
Because this is the biggest headache. and that was the only deal I ever lost money on. But I learned a lot. It was my tuition. So you have to be willing to learn, be willing to make mistakes, and then be willing to grow from those mistakes. Go on and keep willing to go, because the thing that I kept telling myself is there's a lot of real estate investors out there that have thousands of units. There's no way they're dealing with this with every single one. They have a team. Right. I just got to figure out how to do it. So that's the only way that I could get through that.
I think I also don't think people understand that investing can feel like a full contact sport at times. It can feel like you get punched in the gut, in the face, and the ribs over and over again, like you did for almost a year, it sounds like, with this one property. What if that was your first property? You might have said, screw this real estate investing thing. I'm never doing this again. I lost all my money. I'm just going to go back into doing something that is safe and secure, that I know is not going to punch me in the mouth every day with another fine and fee and penalty or whatever it might be. So I think people also need to understand this is a risky thing.
Absolutely.
I've lost a lot of money. I've made a lot of money, lost a lot of money. It never feels good to lose money.
It doesn't.
It's emotionally charging. It's psychologically can mess with you if you're not mentally and spiritually prepared to understand, okay, it doesn't feel good to go from a few $100,000 to zero, in weeks, like some people did with the stock market or something in the last year, or real estate, or whatever it might be, or crypto going up and then coming down. It's a big psychological high and low if you're not prepared for it. And so what have you done psychologically, mentally, and emotionally to prepare for the big swings when you see, oh, my money just went up 10x in the last 3 months. Oh, I'm negative hundreds of thousands in a few weeks, or millions. What have you done to prepare for that mentally and spiritually and psychologically?
I'm glad you brought that up, because one of the things that I say is that the psychology of investing is just as, if not more important than the actual how-tos of investing. And that's especially true when it comes to something like the stock market. In real estate, it's tough. But the difference between real estate and the stock market is, if you buy a, say, $200,000 home, it's not going to go to zero next week, next month, or really ever, because you have some land, you have a physical property. And the stock market, it can happen. And so there's a couple things that you can do.
You invest in stocks too?
I invest my money in 5 places: real estate, stocks, startups, cryptocurrency, and physical gold.
In that descending order of value from the most to the least?
Yeah, I would say so. And then, if you want to put my business in there, then that would be number one.
Startups number one. Your business and startups number one.
But I also invest in other startups as well. But I would say in that order, yes.
Yeah.
But in the stock market particularly, it is a liquid investment, meaning you can easily buy, you can easily sell. And that's what becomes a big psychological game, because every day people are watching that ticker.
I just made money. I just lost money.
What's Tesla doing today? Tesla's up $2, Tesla's down $4. And it can really drain you. And I think most people who start off investing their money, they get sucked into that rat race. I did too. Because when I first started investing my money in the stock market, I was like, wow, this is fun. This is exciting. Oh my God. It becomes like a drug. You become addicted to it, because I was waking up every morning. I was like, I'm going to become a day trader. I got it. And so, I took a summer of when I was in college, and that's all I did.
Really?
I would wake up before the market, and I would read these stock charts, and I would trade these penny stocks. And some days I would make $1,000. Other days I would lose $1,000. And by the end of the summer, I don't think I made any money.
You just spent all this time.
I spent all my time. And I realized this is not for me. I became so addicted to it. All you're doing is watching the numbers go up and down and ticker symbols, and you're reading these forums. So the first thing is, you have to understand that your psychology is important. What I do is, I understand I'm not a trader. I don't trade, I don't flip. Even when it comes to real estate, really any of my investments.
You invest.
I invest to own for the long term. So what does that mean? So I have 2 strategies when it comes to investing my money. I have an active strategy and I have a passive strategy. I'll start with the passive strategy because that's easy to understand. Every month, I passively invest my money into stocks, physical, gold, and cryptocurrency.
Really?
And so what that means is it's automatic,
auto payment,
consistent,
in each one,
all the time. So
you're doing index funds with stocks, or what?
Stocks, I do ETFs, low-cost ETFs, and I have ETFs to give me exposure to the S&P 500. That's kind of your safe, your value. S&P 500 are the biggest 500 companies in the stock market. So that's the kind of the safe value play. I have some ETFs that give me exposure to innovation, startups, growth, because I like that space. Much more risky, but you can see more potential upside. Risk means you could also see more downside. And then I also have ETFs that give me exposure to emerging markets. These are countries that are overseas, countries like China, India, Korea, Brazil, countries that are up and coming to give you some diversification, not just in companies, but also in dollars, right? Diversifying out of the dollar, so it kind of gives me that protection. So every week I have money that's leaving my account and being invested into these different ETFs. I don't care whether the market's up or down. It happens every week. In physical gold, every month, I use an app for this. There's a lot of apps that allow you to do this.
Yeah.
I have money that's withdrawn out of my bank account
Really?
that buys me physical gold.
Really?
Now, people are going to say, why gold? For me, it's real money. It's another way of saving real money, because now if I have 50 grand of cash, would I rather save and bury that 50 grand of cash in my backyard or bury 50 grand of gold in my backyard? I'd rather bury the gold because I know that 50 grand of cash is guaranteed to lose value every single day. Gold is a store of value because it takes time, effort, and labor to mine physical gold. And that time, effort, and labor is represented through the physical piece of gold. So that's why I own it. It's not a huge piece of my portfolio, but it's kind of that insurance. That's the way I look at it. It's protection in case everything else goes wrong, that I have some physical gold. So I have that. And then I have my cryptocurrencies. Now, I'm mainly in Bitcoin. I have some Ethereum and a couple other coins, but mainly Bitcoin. And every day I buy a little bit of cryptocurrency. Again, I know it's volatile. I know you can see big swings up, big swings down. I don't care. I'm buying it every single day. So that's my passive strategy, where it doesn't matter what's going on in the market. I'm just going to keep buying no matter what's going on. Then my active strategy is now where I do more of the fundamental analysis, where I understand where am I actually investing my money. So this requires much more time and more effort on my end. So on the real estate side, I'm looking for deals that are paying me that 7% cash on cash return. And so I'm going to be analyzing the numbers, looking through properties, walk through a lot of deals, and when I find something, I will go out and buy it. In the stock market, rather similar. I'm looking for companies that I believe in, that I believe are good fundamentally. Fundamentally means looking at the numbers, right? What do the revenues look like? Have the revenues been growing? How fast are they growing? 10% a year, 20% a year? What about the profits? But you also have to look a little bit deeper than just the profits, because you want to see what's going on with the expenses. Where are they investing? Are their expenses going up because the cost of business is becoming more expensive? Or are the expenses rising because they're investing more in their company? So you got to do a little bit of digging in there. And then in startups, obviously I invest in my own companies, but I also invest in startup companies. I love entrepreneurship. We're gonna jump back into the video in just a second, but before we do, if you are interested in learning more about how you can start generating passive income, our team put together an amazing guide that will walk you through how you can start generating passive income today. You don't need a ton of money to start generating passive income. What you need is the right financial education. I mean, there are some passive income strategies that don't cost you a lot, and there are other passive income strategies that are completely passive that will cost you more money, and this guide will walk you through the different passive income strategies. That way you can understand what are the best ways to start generating passive income and what's the best strategy for you. You can download our guide to start generating passive income for free when you sign up for our daily newsletter. So if you want to learn more and see how you can start generating passive income, I'll put the link to how you can download our free guide in the description below. Now let's jump back to the video.
All right, so I have a sincere belief that there are habits that keep people poor, and that anybody, regardless of where they're born, what their circumstance is, if they do the right things over a long enough time period, they can get out of it. We are living in horrendously uncertain times.
Yeah.
What are the things, the habits that keep people poor?
Wow. Well, the first one really has to do with understanding money, because unless you understand what money is, none of the other habits really matter, because at its core, what is money? And when you ask people that, you might say it was a $100 bill, a $50 bill, that's what money is. But what is that money? Because that money that we have today is different than what money was 60 years ago. The money that we call money today is currency. It's really just pieces of paper. And when you understand that, it's going to change what you do with the money. And the reason why I'm saying that is because my family's from India, a state in India called Punjab. And over there, it's a very traditional thing that when you earn this paper dollars, many people will convert this cash into gold because they understand that these paper dollars lose value and it's just paper. So they want to convert it to something real, something tangible. So they will go out and buy gold with it.
All right, really fast, explain to people why paper money loses value over time.
So our paper dollars can be manipulated and controlled by other entities such as the Federal Reserve Bank and the government. Now, the interesting thing about the Federal Reserve Bank is it's called the Federal Reserve Bank. However, it's not federal. It says so on their website. They're not a reserve. They don't keep cash reserves anywhere. They're not a bank. You and I can't go there to deposit money. So what happens is,
Should I hear wolves howling in the background? Like, is there something sinister going on? Do you think for real? Or is it just the system and it's just how it works?
well, it depends. If you understand the system, you can use it to your advantage. If you don't understand the system, it is going to screw you over many, many, many times.
Yeah, this is my obsession. So as you and I were talking about before we started rolling camera, 2 years ago, I considered myself very good at making money, very bad at investing money.
Right.
And then the pandemic hit and I really started to panic for other people that, look, I'm going to make it out of the pandemic fine, but I don't know that that will be true for people that don't understand money.
Right.
And so getting educated, like for me to try to help other people, I've had to educate myself about what money is.
Right.
Getting freaked out by inflation, and I've heard you talk about this, so I know you know this well, but that the government, when you say manipulate the money, they literally just make more of it.
Right.
Magically.
Literally. And this is where the rich will become richer, the poor will become poorer, and the middle class will get wiped out. And the reason why is because some people, rich people, will understand money and they will continue teaching their kids. And everybody else, the majority of people who have no idea what's happening, will continue to become poorer because they don't even see it happening. And so what happens is, so you have the government and the Fed. The government spends money. Now, where do they get their money? Well, they get their money from taxpayers, people like you, me, people watching this video, through tax dollars. Now,
Can we hammer that for a second?
Sure.
The government does not make money. The government takes money from people who are making money.
Right.
Now, that's not necessarily bad because they provide a lot of amazing things,
They provide
but they're not
services.
necessarily efficient with their dollars.
So, yeah, so we can dive into that for a second. So, you have to understand what someone's role is. If you are a company, right, you have a company, your job is to make a profit, because if you don't have a profit, you're not going to be in business unless you have some other stream of, venture capital debt or something. But if you don't have a profit, you can't continue operating. And so your job is to be as efficient as possible as a company. The government can actually be benefited by being inefficient, because what is the government's job? You have to understand, what is their role. If their goal is to create jobs, well, then you can be as inefficient as you want and you can achieve that goal. Because if I'm the government, I just want to create as many jobs as possible, I can pay people to pick up this mug and put it from the left hand to right hand. I just created a job. You're employed, you have an income, but you're not producing anything of value. And this is where you have to understand, okay, what is that purpose? And so now, if we get away from the politics for a second, the government now spends money. They get money from taxpayers because the government is not a for-profit entity. They don't create a product and sell it or create something and sell it for a profit. Instead, people make money and then the government taxes your income. Now, just like anybody else, there's checks and balances. If the government has $1 million, they can only spend $1 million, you would think. But that's not how it works. So the government has $1 million, and what's happening now is they're going to spend significantly more than $1 million. Now, if you have a certain amount of income and you spend more than that, what do? Well, you're going to have to subsidize or find that extra cash somewhere. And in the government's case, what they can do is they can go out and look for a loan. It's called a treasury bond. For as long as anyone can remember, have been considered the safest investment anybody can make. Well, what it is you're literally loaning money to the government. But what happens now if there's not enough people out there to loan money to the government? If the government wants trillions and trillions of dollars, if there's not enough people out there to loan that money to the government and they keep wanting to spend more money, you still got to make up this cost. So what do? They call up their friends at the Federal Reserve Bank and they say, hey, we need a $2 trillion loan. And then the Fed's going to say, okay, we got you. Now remember what I said, they're not a reserve. They don't have a cash pile anywhere. So what do? They go to the money printer, boop, 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 and now they can print out $2 trillion. They loan this cash to the government, and now the government got their $2 trillion. The Federal Reserve printed it out of nothing. The government can now take this $2 trillion and spend it in whatever way that they want. It can be inefficient. They can try to create efficient products, but their goal is to hopefully help people. Now, whether they're inefficient or not is a political debate. However, that is what they do. Now,
really fast before we move on. So this is the part that people need to understand about why the rich get richer. Because I'm as a rich guy, I'm like, oh, I'm going to get richer? Like what? Great.
So what happens
But I
then?
never understood how.
So now what happens? You just printed this money, right? And then,
Which you don't actually print, by the way. You just increase a database somewhere.
It's a bunch of digits.
Yep.
And now this money enters our economic circulation. Well, what happens now when more dollars enter without actual wealth being created? Because we saw this happen in textbook form in 2020 and 2021, where nothing was being produced except money. Well, when more money gets produced, it effectively reduces the value of each individual dollar. This is what inflation is. The word inflation comes from the word inflate. What are you inflating? The monetary supply. So you're increasing the monetary supply, causing the value of each individual dollar to go down, which effectively causes the price of things to go up. And so in 2020, 2021, no one's producing. However, the government is spending money like crazy. Where are they getting this money? The Fed. So the Fed's printing money, giving it to the government's spending it like crazy. Now people are getting money. It's people, it's businesses, it's corporations, and this money is being spent. And now everybody is like, wow, I'm sitting at home and I'm rich. You have some people who are getting big unemployment checks. You have some businesses getting millions of dollars, and everything is running smooth. And people are spending money like crazy, buying things, but nothing is being produced. So then what happens? Well, now you have a supply chain mess because everyone's buying all the stuff in stores. However, no business is able to produce anything because the economy shut down. So the supply chain issue then you start to see is a byproduct of the inflation, because everyone's trying to blame, oh, the inflation is happening because of supply chain issues. But you have to look at what is the real root cause. The inflation is what causes the supply chain issues. And now we're trying to go backwards. But this is where rich get rich and the poor get poorer, because as the value of the dollars drop, what happens? For regular people, your salary doesn't stretch as far. Your savings don't buy you as much. And so you're effectively becoming poorer each and every day, because for most of us, we're taught to save our money. That's what I was told to do growing up. That traditional Indian house is save, save, save. And so I was told to save my money, and your savings are becoming less valuable each and every day. While what wealthy people do is they're not storing cash, they're buying assets. And so when we have this sort of economic system.
Can you explain what an asset is?
An asset.
We're now getting to the root of how the rich actually get richer.
Right.
This was the part it took me a very long time to understand, but now that I get it, one, it doesn't need to be the rich that are getting richer. Anybody can own assets.
Yeah.
But they have to understand what assets are and then actually buy said assets.
Right.
Because this is how the government pumps the money into the system. And this was the part, like, I'm grateful sometimes that I'm kind of dumb, for real. And this really, I had a breakthrough moment back at Quest. We were dealing with nutritional science, and I didn't always understand it. And so I would have to keep asking. But what I found was if I just totally got rid of my embarrassment over not knowing, and I kept asking until I understood it so well that I could explain it to other people, that ended up propelling me forward, because I was no longer just nodding and smiling and going along. I was like, no, I don't get that. I don't understand.
Yeah.
And so by pushing into that, then I actually began to understand the biology. I began to understand what ingredients made sense and all of that.
Right.
So, but I had to be willing to look stupid.
Yeah.
And so now, because I've been willing to look stupid for so long in the world of finance, I finally asked the magic question, which is when people, because I actually thought they were printing money. I thought that $100 bills were coming off of a printing machine. That's not how it's done, at least not to the vast majority of it. It's zeros and ones in a database. And when they create that money, I was like, whose database entry is it? Like, are they actually going into rich people's accounts and giving them money? No. What they do is they buy oftentimes government assets. I don't want to introduce the word bonds and stuff.
Sure.
But they're buying assets from the government.
Right.
But the question is, where did those assets get purchased in the first place? And they got purchased by people who are effectively trying to park their money, as they call it.
Yeah.
So I, for years, was parking my money in government bonds because the government guarantees it.
Yeah.
And so the way that the government raises money without having to raise your tax is they put bonds out into the world that then people buy. So when they're pumping money into the system, they just go buy those bonds. So now they're buying them from rich people because rich people were the ones that were educated enough and had the capital to buy said bonds.
That's correct. And it goes actually a little bit deeper, because in the pandemic, we saw something that we've never seen happen before. So the Fed has the ability to work with interest rates. I'll talk about that in just a second. And then they can print money and give it to the government. And then when you have an emergency time, we saw this happen in 2008, we saw it happen in 2020, they can do weird things. So what they did in 2020, this is the first time it's ever happened in history, is they directly gave money to corporations in the form of purchasing corporate bond ETFs. So think of it this way. The biggest corporations in America can go out and raise money from a bank. they can go out and raise investment dollars, or they can put out this loan, say, if you are a regular person, you want to loan money to us, you can do that. And so there's ETFs, which is a group of corporations that are looking to raise money. And it's a way to kind of track those debt investments. Well, in 2020, because a lot of corporations had no cash, and now all of a sudden they're like, oh, we can't sell products, we're going to go under. The Fed did something that has never been done, and they started buying corporate bond ETFs in the first time in history. And this is where things got really dicey, because now how do you decide who gets that money or not? I mean, they're printing money. Somebody's got to pay for that. Who's paying for it? Regular people, average people, because now it's a hidden tax. Because the government can't just spend money without somebody paying for it. They have to generate the tax dollars. If they don't pay it through tax dollars, somebody's still going to have to pay a tax. And inflation now is a hidden tax. It's a silent tax. It affects the people who don't understand money, and it disproportionately affects the poor and the financially uneducated. And this is why financial education is so important, is because if you don't understand this, you are going to get screwed over by the system. Because now, guess what? Your gas is going to be more expensive. Your groceries are going to be more expensive. Your home cost is going to be more expensive. The cost to do anything is going to cost you so much more today, next year, the year after that. While your salary, hey, you got a raise, but you're actually broker now than you were before the raise, because your raise isn't keeping up with inflation. And so what's happening now, this money gets printed and it enters our economic circulation, and now you can own the assets. Or what happens is, let's say you own stocks, you own real estate. Well, the Fed can also manipulate interest rates. So when interest rates go down, it makes borrowing money cheaper. Well, when you make borrowing money cheaper, more people and institutions are going to go out and borrow money. This also creates more inflation, because now when you go to the bank and you borrow $1 million or $100,000, the bank is going to work with the Fed to print this money, and that's how it gets injected into the economy. So lower interest rates create more inflation. And if you are somebody who's financially educated, you own assets. And we didn't explicitly answer what is an asset. It is something that gives you equity. And at the broadest form, an asset is something that puts money in your pocket. A liability is something that takes money away from your pocket. What's an example of an asset? This could be owning a business, investing in stocks, investing in real estate, anything that you buy for the purpose of making money, right? And so when interest rates go down, because now the Fed working with the government want to create more inflation, more dollars are going to enter economic circulation. More people are going to want to buy a home. Well, if you have more demand to buy a home, where do home prices go? Up. Who owns homes? Well, yeah, if you're a homeowner, but if you are a real estate investor, now the value of your assets have just, because now you own multiple real estate investments. Your rents have gone up. Your stock investments have gone up, because now businesses can borrow money for effectively nothing. You borrow money for 3%, 4%, 5%, and now you can borrow hundreds of millions of dollars to grow the company. And if you can grow your company by 6%, well, you just made a profit off of the free debt. And so now corporations become wealthier because of it. Asset prices go up. And what does this do? The reason why it makes rich people richer and poor people poorer is because not only is your cost of living higher, but now if you want to go out and invest your money, well, asset prices are more difficult to attain. It's harder to buy the same level of stocks. It's harder to buy the same level of real estate, because now the people who own these have already seen that appreciation. And now if you're wealthy and you understand this and you're buying these assets and you've been buying them, now you're seeing the real gains, and you start to see this divide between the rich and the poor. And this is where inflation disproportionately hurts the financially uneducated and the poor, and disproportionately benefits the wealthy, and that's why the middle class gets wiped out. And the crazy thing is, none of us are taught this. I didn't grow up learning about money. I didn't grow up learning about financial education. I didn't grow up learning about investing. I didn't grow up learning about any sort of wealth. My parents are immigrants from a state in India called Punjab, like I was saying before. And in my household, success meant go to school, get good grades, get a good job. And for me, that good job was I had to become a doctor. I was actually given two options: become a doctor, become a failure. I could choose.
And they let you choose.
And they let me
That's
choose,
great.
right? And so I saw how hard they worked. For my dad, if he had a Saturday and a Sunday off, that was considered a long weekend. And so, I wanted to give back to my parents. I knew I wanted to become successful. They wanted me to become successful. And so I kind of followed that path, like doing what everybody says, following the system, trusting the system, right? And it just didn't make sense to me because on one hand, in my house, money was a taboo topic. You don't talk about money. You don't worry about money. It's a bad thing. But at the same time, I see how hard my parents are working to get paid, to pay for our lives. Now, we were fortunate. I never had to worry about my next meal. We were never poor or anything like that. But I saw how hard they worked. And it wasn't until I got to college until I realized something isn't adding up. Because I was actually studying to become a doctor. I was taking the medical college admission test, the MCAT. And as I'm studying for this test, I started doing a couple things. First, I started reading business books because I was just interested by this. That was the first. English is my second language, so I never grew up reading books in my grade school years. Even English class, I almost failed my English class in I think it was middle school because I just didn't understand how to write papers or do all that. But as soon as I started reading business books, I started reading them for fun because I was interested by it. And then I started going on to Google. And I started researching just random things from things like the richest people in America. And, you see like Warren Buffett, Steve Jobs, Mark Zuckerberg. I don't even know, he was on it back then. But you had a bunch of people who none of them were doctors. None of them went down that traditional path. And I was like, wait, I thought that grades correlated linearly with income. Like if I got better grades, my income would directly correlate with that. So that was like my first wait, is something wrong here? Was something like, it just wasn't adding up. And that's when I started to dig a little bit deeper. And it's talked about wealthy people investing in real estate. Now, I had no idea what that meant because I didn't know any real estate investors. I didn't even know what real investing was. I didn't grow up around investors. And it said, however, the wealthy people invest in real estate. And this was right after the 2008 crash. I didn't know what was normal in real estate. To me, this is all I knew because now this is the first time I'm looking at real estate prices. And I said, I've been running this event planning company kind of as a side hustle because, I wanted to become successful. However, my parents didn't want me to do anything except study because to them, if it's not related to biology or math, it's a distraction. Even like playing football was a distraction. Doing all these things that were not related to becoming a doctor is just a distraction. So I always had this entrepreneurial bug, but I always kind of did it in secret because it was never allowed. So in high school, I worked at weddings and I got to meet a lot of the Indian DJs. And one of them, or a couple of them had this idea to host teen parties for kids in my high school. Well, I was like, yeah, why not? We got to meet one of these little local Indian restaurant owners and they were like, yeah, why don't you throw parties here for free? You can charge cover, do whatever you want. We want the exposure. So I kind of did this in secret. Now I'm in high school, hosting these little teen parties, became this little event promoter. Didn't make that much money, but it was a little hobby that I started. And then I go to college, I'm 17. I don't know what college is like or supposed to be like in America. And I go there thinking everybody's gonna be spending Friday nights in the chemistry lab studying. And I get there and everybody is partying, drinking. I'm like, none of you guys have any money. How do you afford all these, this lifestyle? And I was like, I need something to do on Friday nights. So that's when I brought this event planning company to college, again, in secret. My parents didn't know I was doing this. And I'm 17, and I was like, well, let's try this. So I started knocking on the doors of clubs, venues, bars, restaurants, trying to find a place that will let me do it. That's not gonna charge me a lot of money or really any money because I don't have the money to put a deposit down for a fancy venue. And I found a venue that was like, yeah, you can do it here. We're not gonna charge you a penny, just give us half of your cover charge. I was like, all right, cool. It's not gonna cost me a penny. And I talked to my DJ friends and they were willing to do it. They split the revenue with me. So I only made 25% of the revenue. 50% went to the club, 25% went to the DJ, 25% went to me to put everything together. But it was a start. And I started doing that in college. And
already I want people to think about how you're thinking differently about money. Because bringing this back to the idea that there are habits that keep people poor. So one of them is living and thinking in cash. And so if you're storing your money in cash, you're not buying assets like you were talking about earlier, things that you purchase that give you money. The company that you're talking about building now, the company that I built, those are assets. Apartment complex, an asset potentially. There's actually some complexities there. But buying into the stock market, right? Assets.
Right.
So if you're thinking in cash and the cash supply is being inflated, then your buying power is going down. So going back to your point about the poor getting poorer. So we're pulling down their buying power. And then also just the way that you start thinking like an entrepreneur about like, I don't have the upfront capital. This is another mistake people make. Oh, that's okay for people that are already rich. They can do things that I can't do. But you weren't thinking that, right? So you, I'm sure, went to people and they said, okay, cool, give us upfront money. You didn't have it, so you go on to the next person. But because you keep going until you find the person that's like, okay, word, like come in, throw your party, I'll take half up front. You even find partners, again, paying them in equity. You're paying them with future money that you don't currently have.
Right.
Like that one thing alone is a huge habit difference between people who think I trade time for money, right?
Yep.
I go and I work, I give you my time, you give me that money. Nothing wrong with that, and it's the path that most people will take.
Right.
But for people that really want to understand what we're about to go through, because this could be nothing, and a year from now we look back on this video and we think, whew, thank God that it didn't get as bad as it could.
Right.
But we could also be headed into a recession, like a deep global recession that could last a year or 2 years or more.
Sure.
So getting people to think more entrepreneurially, like you're laying out in the story, I just want to orient people to the fact there's nothing necessarily different about you. Anybody can think like that and get the kind of results that you end up getting.
I think it kind of goes back to what you were saying. It was maybe before we started rolling, where you said you were dumb, and so you asked a lot of questions. For me, I said I was dumb because I didn't really care about risk. I never even looked at risk. For me, it was opportunity. That's all I saw, and it was just a way for me to get started. And I was called stupid and dumb all the time. And nowadays, if I'm not called stupid, it's probably not a crazy enough idea. And so that's kind of exactly what you're saying. I started making this little bit of money, and it started to grow, and I had some cash in the bank, and now I started reading these books and they talk about investing in real estate. I was like, all right, let's try this. So I was 19 at the time, and I started looking at real estate investment properties. And again, I didn't know what was normal. And I took my MCAT on August 22nd. On August 23rd, I closed on my first real estate investment property. It was a small 1,000 square foot condo out of foreclosure, and I bought it for $8,000. That was the total price of the condo. And
that's insane.
That same condo sold for $150,000 just a few years prior.
Wow.
And that condo then started paying me $600 a month. And now, you talk about exchanging time for money. See, in the beginning, I didn't understand that concept. Because when I was working in this event planning company, it was just me. If I didn't do everything, nothing was going to happen. But then this real estate investment property changed the way I thought about it, because now all of a sudden, this asset, I bought this condo, it's paying me money, and I don't got to physically go host a party. I don't got to go flip pretzels. I used to work at Auntie Anne's Pretzels as well. I don't have to go and do something. It was just there. I owned it. And now this condo is paying me for just owning the asset. And now all of a sudden I started thinking different. I started to get a little bit upset, because I was like, well, why was I never taught about this? We're not taught about investing. We're not taught about financial education. We're not taught about wealth. And that's, talking about now money habits. Well, how the next habit that you got to understand is you got to be able to ask questions, because if you don't understand the way the system works, you're never going to be able to answer or ask the right questions. Because the way that the system works across the board is, in a company, you have the workers, then you have the owners. It's kind of like a overlap. And sometimes the workers are the owners, some of them kind of in the center, but the workers are the ones that are now working every single day. You get your salary. The owners aren't working for a salary. They're working for equity, profits. So they're hoping that now the workers will be able to drive up the profits. So now the valuation of this asset is higher. Now, when you have this sort of inflation, who hurts the most? The workers. Your incomes don't grow to keep up with inflation. However, the asset value, which is now the value of the company, disproportionately gets benefited, because now this money gets printed, it gets created out of thin air, it flows into assets. And that makes the valuation of companies, for example, to go up. So now you have these two things, right? You have the workers and you have the owners. This is how the system works.
So it depends on what companies get that money. How did they decide? So this is the first time ever that they decide to buy company stock. How did they pick?
Yeah, bond ETFs.
Was it bonds? Sorry.
So how does the Fed decide? I have no idea how they decide. However, let's think of it this way. So stimulus checks went out, right? People get cash. You feel wealthier in the short term. Your bank account goes up. Some people took this cash. Maybe they paid off some debt. Maybe you go and invested this money, but a big chunk of people took this cash and then they went out and they spent it. Well, if you need this money, Well, yeah, and you had this whole range, right? Some people really needed it. Some people went to Walmart, they went to Kroger, they went somewhere and they bought groceries.
Fair.
But still, the money, where did they go? They went to Walmart, Kroger, and those companies saw bigger profits because as money was printed, it goes into the hands of people and then it flows to the corporation. Other people went to Louis Vuitton, they went to Gucci, they went to the Apple store, they went to Lululemon. Again, who does it benefit? So the money was printed out of thin air. Somebody has to pay a price for that. The regular person, average people, they have to pay now higher taxes, which is inflation in this case.
Yeah,
the invisible
it's
tax.
not a true tax. They'll be confused by that. But
The
the
hidden
invisible
tax,
tax,
right?
It lowers your buying power.
Lowers your buying
That's
power.
The tax.
And then where does all the money flow? It flows now to
Whatever you buy.
the wealthy, the rich. And so now, what do you want to do? Go back to that system. You have the workers and the owners. Everybody in America should be a business owner. However, not everybody should be in the business of starting a company, and not everybody should be in the business of operating a company. So what does that mean? Well, you can be a worker and an owner, right? This concept of equity, you have to understand this because wealthy people are working for equity. They're not just working for a salary. And so what you want to do now is you want to understand, okay, I'm working every day to get paid. Now, what are you doing with the salary? Either you can take the salary and go out and spend all of it, or you can take some of the salary now and work to build equity. Maybe that's in stocks. Maybe that's in real estate. Maybe that's in your own company.
So if I buy stocks, I'm buying equity.
You're building equity. You're literally buying ownership in companies. If you go out and buy a share of, say, McDonald's, you become one of the owners of the McDonald's company. And now when the McDonald's valuation goes up, you get to share in that because the price of your stock, the value of your stock goes up.
The big thing that you wish everyone knew about money before they started making it.
Oh man, well, it goes back to, I guess, just the basics because most of us, myself included, are never taught a thing about money. We're told, go to school, get a degree, get a job, and now you figure it out.
Right.
And then what happens for the majority of people is you end up broke, you end up struggling financially, and you can never figure out why. So the first thing is, what is it that you want to achieve in your life financially? And then you have to go out and figure it out yourself because unfortunately, school will never teach you this stuff.
So you didn't learn this in high school or University of Michigan or
No, never.
law school? They didn't teach you any of this stuff?
I went through high school, I went through college, I went through 1 year grad school, and then I went through law school, and I never once learned a thing about money. Never once learned a thing about budgeting, never once learned a thing about building wealth, never once learned a thing about investing my money, and never once learned a thing about passive income. Yeah, here I am today with a law degree, and I haven't worked a single day as an attorney.
Why not?
Well, it doesn't make sense for me financially, and it's not my purpose. So, I grew up in a traditional Indian house.
Right. Doctor, lawyer.
Well, for me, I had two options: doctor or failure. Those are the two options that I had.
Right.
My parents are immigrants from a state in India called Punjab, and my parents came to the country with very little. And so, I saw my parents work their butt off every single day. If my dad got a Saturday and a Sunday off, it was considered a long weekend. And so I didn't get to spend a lot of time with my parents growing up. And they would always tell me that, you have to go out and become successful. And I completely agreed because I wanted to give back to my parents. I wanted to help support them. And I figured, okay, if I want to become successful, I should follow the steps that we're told to become successful. What are those steps? Go to school, get a good degree, get a good job. For me, in my case, it was become a doctor. And along that way, it was in college, I realized that something's wrong. Something's not adding up. And it actually happened. I was studying to get into medical school. And as I was studying, I started reading other business books and financial books. And I remember this. I was in the library studying, and I went onto Google, and I searched the richest people in America. And you see people like Steve Jobs, Warren Buffett, Bill Gates, Mark Zuckerberg. And I was like, none of these people are doctors. None of these people went down that traditional route of, getting a degree, doing a good job. Am I missing something? Because I thought that if you go to school, get a good degree, you can make a lot of money. And if you work harder in school, get better grades, you'll make even more money. So I thought it was just directly correlated. Your grades, your income. And that's when I started questioning things. And I realized, maybe this isn't right. And as you start to go down deeper and deeper down the rabbit hole, you start to realize, oh my God, everything that I've been told is a lie. And so that kind of pushed me into this whole painful, emotional journey of learning about money, learning about entrepreneurship, learning about what does it mean to become wealthy and how do you actually do it.
Right.
So that was kind of the initial phase for me, and then I had to go out and actually start learning it.
Yeah.
And the first real experience of that for me was I had this event planning company that I started in college. And the reason why I started it was because when I was in high school, I worked at Indian weddings. So I got to know a lot of the DJs.
Right.
And when I was in high school, these DJs were like, hey man, you know a lot of people in high school. How about we host a teen party for your friends in high school? I was like, all right, that's fine. You know, why not? Started this little teen party business in high school, and I go to college. Don't know what to expect because my parents didn't go to university here. I think everybody goes to college to study hard and become this big thing in college. I get to college and everybody is partying.
Yeah.
They're blowing their money that they don't have on alcohol. They're drinking. I don't drink. I don't smoke. I'm not into that party scene, but I need something to do on Friday nights. So I was like, why don't I just take this teen party business that I had in high school, bring it to college? And that's what I did. My freshman year, I was 17 years old. I started knocking on the door of every club, venue, bar, restaurant, asking if I could host a party here. Some would say, yeah, it's going to cost you $10,000. Some would say, yeah, it's going to cost you 20 grand. I don't have that money.
Right.
But then one or two said, you can do it here. We're not going to charge you a penny. Just give us half of the cover charge, half of the money that you bring in. I said, okay, now I'm in business. So I started making a little bit of money doing this, and I had some cash saved up. And I'm starting to read these business books, and every business book said, wealthy people invest in real estate. I don't know what that means. I don't know any real estate investors. My parents aren't investors. And so I was like, okay, if wealthy people invest in real estate, maybe I should invest in real estate. And this was right after the 2008 crash, and I'm in Michigan, where real estate was hit extremely hard. So I was like, all right, you know, I would like to invest in real estate. I'm studying for my medical college admission test. I start going to Google because I'm bored while I'm studying for this exam. I'm reading about the Forbes richest people. None of them are doctors. None of them are people that work the traditional path. And you know, I have this idea to start investing in real estate. So I started looking at real estate in between my study sessions. And on August 22nd, I took the medical college admission test, the MCAT. On August 23rd, I closed on my first real estate investment property.
Wow. How old were you?
I was 19.
Holy cow.
It was $8,000.
Was the investment?
Was the price of the condo.
The condo was $8 grand?
$8 grand.
How'd you get a condo for $8 grand?
This is right after the 2008 crash.
Wow.
It
You got it on foreclosure or what?
It was out of foreclosure. That same condo was selling for about 150 grand just a few years prior.
Come on.
Yeah, and so I came in. It was actually listed on sale for $8,400. I made an offer for $4,000. They came down to $7,000, and I was still trying to push them lower. But then they said they had another offer on the table. I didn't want to lose it, so I said, I'll give you $8 grand, right?
Wow.
So I bought it for $8 grand, put in a few $1,000s worth of work, and I leased it for $600 a month. And now all of a sudden, my mind was blown because I kind of had this idea of what entrepreneurship was. I had never heard that term until I came to college, but I was running this event planning company, and I'm starting to learn about this thing called entrepreneurship. And now I had this condo that's generating me this like almost passive income. I say almost because I was making a lot of mistakes in the beginning. But now I'm like, wow, this investing thing is very unique because I never learned this in school. My teachers never taught me this. But why am I working so hard in school? I mean, I want to become a doctor so I can ultimately make money. Now I start having this, you know, I talked about an emotional dilemma. Why am I becoming a doctor? Okay, I want to make my parents happy. Check. I want to be successful. Check. Do I really want to be a doctor? Maybe. And now I'm starting to question my actual beliefs. Because if I become a doctor, how do you make money? You treat people. I kind of have this entrepreneurial mind. I want to become successful. How do you make more money? You treat more people. So it's like, this kind of runs into a dilemma because if I'm trying to maximize my income as a doctor, I got to maximize how many patients I see. Maybe that means I don't get to give the best value to each individual patient. But as a human, I want to provide the most value possible. So I started to kind of face this dilemma where maybe I'm becoming a doctor for the wrong reasons.
Interesting.
And then I run this idea by my parents. I don't want to be a doctor.
And they're like,
absolutely not. My dad was angry. My mom was furious. It took my mom about 1.5 years to believe that her son was not going to be a doctor.
oh man.
And when I say it was tough, like my parents would tell all their friends Jaspreet's not going to become a doctor.
Oh, wow. You're not becoming one.
I'm not going to become one. Now I'm getting calls from my family in India. I'm getting calls from my family across the States.
What are you doing? You're a disgrace to your family.
Exactly. I heard that again and again and again. But I was like, this is not for me. And I started to realize that there's more to this thing. So now I started to go down this financial education journey. And the more I learned, the more I realized I was lied to. Like, we're taught to go to school, to get a degree, to get a job, so we can then get a job and climb the corporate ladder. But wealthy people don't do that. Mm-hmm. Wealthy people are not working to climb the corporate ladder. They're working to own the corporate ladder. I didn't even realize that you could do that. Now, you can climb the corporate ladder and work to own the corporate ladder at the same time, but it's a different mindset, right?
Right.
Most of us are taught to get that degree so we can do one thing, climb the corporate ladder, earn a bigger salary. But if you only rely on your salary, you're just one step away from being broke. Because if you lose your job, something happens to you, you can't work, or your company goes down, you lost your salary and now you have no income coming in, and now what? You're scrambling for a job, maybe you have some savings to help take care of you.
Or if you haven't been saving and you just spend on things all the time and you have no savings, then you're really screwed.
You're going into credit card debt,
right?
And now you're trying to figure out how do you make things work. And by then it's too late. This is where you gotta be proactive. And now I'm just like, this is crazy. Why was I never taught this? I was never taught about wealth. I was never taught about investing. I was never taught about this sort of financial education. But why aren't we taught this? And that's when I realized it's very profitable to keep people financially uneducated. It's profitable to keep people poor.
Interesting. What would you say is the main system that keeps people poor then?
It goes down to so many different things. The banks profit when you're financially uneducated because they'll keep you saving money in the bank. They'll keep you in consumer debt. If the banks lived by their own advice, which is save money, the banks would be losing money. When you go and deposit $1,000 in the bank, that cash that you deposited is a liability for the bank. An asset is something that puts money in your pocket. A liability is something that takes money away from your pocket. So when the bank has your cash, it's a liability for them. They want to get rid of it as fast as possible. And the way they do that is by lending it out because it's an investment for the bank. They don't want to hold on to cash, but they want you to save your money.
You want you to give them cash.
Right.
And just leave it there.
Leave it there. And what's happening to your cash while it's there? It's losing value to inflation each and every day. Every day that you keep your cash in the bank, you're becoming poorer each and every day. Now it's funny, I made a video on this in 2016. It was my first video to go viral. It was called You're Guaranteed to Go Broke If You Do This. And I was talking about inflation at 2 to 3%. If you keep your cash in the bank, you're going broke every single day. Now here we are.
8.5%.
8.5%. And now people are starting to realize, wow, this inflation is a real problem. And so now when you keep your cash in the bank is paying you 0.01%, maybe 0.5% if you're lucky, and they're turning around lending it for 5%, 6%. And so the bank does not want to keep that cash in savings because it's a liability for them. They want to keep you spending money on their credit card because now they'll get to earn 18 to 25% in interest every time you spend $1.
Wow.
Governments want you to be financially uneducated because when you're financially uneducated, guess what? You are an employee and you're a consumer. Who pays the highest taxes? Employees and consumers. Everybody knows that rich people don't pay taxes. It makes people angry, but a lot of times we don't understand why.
Right.
And we get angry at the wrong things and the wrong reasons.
Yeah. But the more you make as a business owner, until you're like uber rich, I feel like you're spending a lot of taxes.
You are. And you know what? And there's a lot of things that you can do legally to pay less money in taxes. And there's different ways that you can invest your money to pay less money in taxes. So I'll give you a couple examples.
Yeah.
Well, let me start with this. Tax avoidance and tax evading are two similar words with two very different outcomes. This is one of the first things that you learn in law school. Tax evading is illegal.
Yes.
You go to jail.
Yes.
Tax avoiding is legal, and then you get hated for doing that. But this is the way it works.
But you're playing within the rules of the system.
And if you learn the IRS code, it's a rule book. Mm-hmm. And the people who understand the rule book are the people who have the money to hire the good accountants and the good attorneys.
But you're not an accountant, but have you studied the
I have studied a lot of tax law.
Really?
Yeah. And so what happens is wealthy people will understand how this works, play within that system, and pay little to no money in taxes.
What are 3 things that people who are making $500,000 and above should be doing to avoid taxes better?
So let's start with, I'm going to assume that you have either some sort of your own income, you're a side hustler, or you are a business owner.
Yes.
So if you make $500,000, let's assume that's profit. You are taxed on income. So if you take out a salary, that's going to be taxed. Now the question is, what is a tax deduction? Or the better question is, how can you make something a tax deduction? Because anything can be a tax deduction if you know how to make it a deduction. So that's the question that you have to ask yourself, because if you don't have an income, you don't have any tax.
Right.
So this is what wealthy people are doing. So I'll give you an example of it being done, then I'll show you how people can do it on a potentially smaller scale. Elon Musk, he is probably the biggest example of this. He never got paid a salary running and owning Tesla. He got paid in stock options. So these stock options were
Was
issued
this
to him.
even before it was public?
This is, I think it was around the time that it was public, or maybe a little bit before.
Okay.
But he's been getting stock options for a long time.
Sure.
But the stock options that he gets, or originally got, were at $6 a share. So when the stock went up to $1,000 a share, and he was given millions of these stock
Right.
options, now he has on paper a lot of money, but that money isn't in his bank account. So what he does is, instead of selling it and having an income, he goes to the bank and says, hey, I have these stock options which are worth billions of dollars. How about you give me a loan at 3, 4, 5% interest? No bank is going to say no to that, because the value of this is so much, it's billions of dollars. I mean, you can make the number smaller, but no bank is going to say no. He takes that loan, pays 3 to 4 to 5% interest on it, and if his company grows, his stock value grows by 6%, he just made a profit on that. He didn't have to take any money out, never took an income, doesn't pay any taxes, and is able to now spend his money, live free, buy whatever he wants, live rich, and not pay a penny in tax.
So he didn't have to sell any of the stock, because if he sold it, he'd pay an income tax right when
Right.
you sell it. Instead, you get a loan out from the bank. And you don't have to pay tax on that loan.
When you go and get a mortgage
You're
to buy a
getting into
home,
debt.
it's debt. It's not taxable. It's not income. If you go and refinance your home, it's not income. It's cash that you have in your pocket, but it's not income. You're taxed on income. So now your job now as a business owner is strategically, how do you not have an income? Now you might say, well, I need money to spend. Sure, of course you do. But how can you now strategically use your income to pay for your lifestyle? Now, again, it's got to be within the rules, so talk to a tax advisor. But right now, after the pandemic, one of the things that the presidential administration wants to do is encourage people to eat out, eat at restaurants, because restaurants were hit so hard by the pandemic.
Right.
So what do? They created a 100% deduction on food through 2022. So if you go out to eat with your team, it's a 100% deduction.
It's all write-offs.
It's a write-off. I'm here in San Diego. Well, we're in LA right now, but I'm here on a 2-month business trip to San Diego with my business partner. I have to rent a car. I actually got a Ford Mustang, because I always wanted a Ford
Nice.
Mustang when I was a kid. That was like my dream car. So I got one here with a convertible.
Nice.
And we have to go to business meetings. We have to go out and explore San Diego, do these things. My business partner is my wife. We're staying in an Airbnb in beautiful San Diego. Guess what? These things are tax deductions against my business. I'm here working. When you're an entrepreneur, everything is work.
Yeah.
Now the question is, how do you spend your money in a way that is going to give you a tax write-off? But you have to be smart here, because you don't want to just blow $500,000 so you don't have to pay 150 grand in taxes, right? Like my accountant called me up last year and said, Jaspreet, you need to go out and buy a G-Wagon. I said, what? I don't want to buy a G-Wagon. Why? He said, well, there's this tax deduction going on saying if you go out and buy a heavy car, it's still going on right now. If you go out and buy a heavy car, you can deduct up to 100% of that value of that vehicle right now.
Really?
And because you're an influencer, you can potentially claim that as an influencer, you need a G-Wagon to help you support your lifestyle. The tax code allows this. And I was like, well, I don't want to go out and spend 150 grand for a car that I don't necessarily need just so I can save, let's just say 50 grand on those taxes. So you have to be smart here and know what's right for you, and not just spend your money to spend $1 to save 25 cents.
Right.
So you just need to know the right strategies that can work for you. And these things change over time, which is why the best thing that you can do is go out and hire a tax accountant, a tax advisor, somebody that isn't just going to file your taxes, but someone that's going to help guide you and say, all right, here are some things that you could potentially spend your money on. Here are where there are more benefits coming this year, next year, things that you want to do. And so there's going to be times where it's going to be more beneficial for you to spend money. There's going to be times where it's going to be more beneficial for you to take in money. And, it's all a game.
Yeah.
And this is what wealthy people understand. It's all a game. And a lot of people hate that, this person's not paying taxes, that person's not paying taxes. But at the end of the day, what you have to remember is somebody else wrote the tax code.
Yeah.
All that people are doing is they're trying to learn, okay, this is what the tax code is. What do I do? And, and then you kind of get into the other philosophical questions. Who's going to do better with $100,000, the government or me? If I have $100,000 in my pocket, I can go hire an employee or two. The government's going to, spend that money wherever they spend it, and pennies will end up actually going to help people. I'm all for helping people. I think that's very important. As soon as we hit 1 million subscribers on YouTube, what we did was took my team, we went out to a teacher store, and essentially I asked them, hey, can we buy everything in your store?
Wow.
Because, the whole, during the pandemic, people weren't going to class in person, and so a lot of these businesses were hurt. And I said, can I buy everything? And she said, well, we need some of this stuff for our teachers. I said, what can we buy? So then we went out and bought a big chunk of the store.
Mr. Beast style.
Mr. Beast style. It was a fun video. Took the team out kind of as a celebration. We bought a big chunk, took it out to a school in Detroit, gave it to them for free. And then I asked the principal there, as a friend of mine, I said, how many teachers do you have? I said, okay. And I gave every one of his teachers a $500 check to help support their students. Giving is important. But, it goes back to the tax question of who does a better job with their money, right? Entrepreneurs who are working to create more jobs, who are working to produce more value, or the government, which, may not be so good with their money.
Absolutely, yeah. So you started doing the real estate thing early. Are you still a massive investor in real estate? Or what's your approach on it now?
Yeah. So this is an interesting question that you asked, especially right after the tax question. So real estate is one of the best tax games for investors. That's one of the reasons why wealthy people love investing in real estate, because not only can you get cash flow, but you also get tax benefits. I started investing in real estate when I was 19 on accident. I went through a lot of pain. I remember when I told my dad first, hey dad, I want to go invest in real estate. He was like, you're stupid, go study, go become a doctor. So I started investing in real estate then, and I continued to buy homes. And I remember, this is right after the 2008 crash. I was buying homes for like $30,000 in good areas. I remember home prices went up to $50,000, and I was like, that's a lot of money for a home. I didn't know anything else, right? That's all I saw. And so to me, I was like, that's expensive. But I continued buying, and I still am buying, but not as much as I was before, because now I've been working on a couple other businesses. And so what I'm realizing is, okay, when I invest my money in real estate, my goal is to get a 7% cash on cash return on my money. Meaning for every dollar I invest, I want to get 7 cents back in cash flow, positive cash flow every year. If I invest $100,000, I want $7,000 of profit every single year. Well, I'm an entrepreneur, right? So I'm working on a couple of different companies, one of which is Market Briefs. And so now I'm in this position where, what do I do with this cash? I can take this money, put it in real estate, get a 7-8% return on my money, or I can put it in Market Briefs, which would be a bigger tax deduction, because now, if I spend money in advertising, I spend money in marketing, I hire more employees, we have a smaller profit, but then I can grow the company significantly faster than 7% a year. So what I've been doing now is investing more of my money into Market Briefs, because it's something that I'm super passionate about. Like, I love real estate. I love revitalizing homes and buildings and really helping to build the neighborhoods through that. But Market Briefs had such a different value in the sense that we're making financial news accessible, because I didn't grow up learning about money.
Right.
And CNBC looked cool, but I never understood anything that was happening there. They have all these confusing terms that are going on. So it's a way to make financial education and what's going on with money more accessible to people, because I'm realizing how important that is to me, because the more and more I talk to people, the more that people listen to what I say, the more I hear, oh my God, I wish I would have learned this when I was younger. I'm like, yeah, I know, me too. And so it's like, it's important for me to help get that message out there, because it's so needed. We talk about, especially in Detroit, food deserts, where there's areas people can't get access to healthy food. But this money desert, this financial education desert, it's so widespread
global.
where none of us are taught a thing about money. And it makes me angry because if I didn't accidentally start reading these business books, if I didn't accidentally start investing in real estate, I would be somewhere completely different. You know, I have a lot of friends who are doctors now. They're working their butt off. They're also paying the highest taxes. They're also trying to figure out how to afford my lifestyle, because when you go and become a doctor, you make a good salary. But guess what? Now you have big student loans you got to pay back.
Yeah.
And now a lot of times you want to live that doctor lifestyle. You want to have the G-Wagon, you want to have the Range Rover, you want to have the nice car, you want to have the nice home. So now you graduate, you're 28, 29 years old, you have $500,000 of student loans you got to pay back. You're making a few $100,000 a year, but you're working your butt off. It's very stressful. And now you have all these new expenses, your homes, your cars.
And how much does that $500,000 in student loan actually become after 30 years of paying it off?
Oh man, yeah, over $1 million.
Really?
Yeah.
So it's really, it's not $500,000 in loans, it's $1 million in loans that you're paying off for 30 years.
Yeah.
Right?
Exactly.
With the interest.
And I want to add on that point, because the thing about student loans, you know, we talk about who do you trust, where do you get your information from, right? Everybody, the system, it says go to school, get a degree. If we don't have money to get a degree, what do? Get student loans. I started looking deeper, right? You start asking the question, why? The number one liability for young people nowadays are student loans. And the government always talks about how we have this huge student loan epidemic, this huge student loan problem. But the number one asset on the United States balance sheet are student loans.
Really?
This blew my mind. You go to Google, search this, the assets on the United States balance sheet, number one asset. You'll see student loans are their number one asset. So on one hand, we have people talking about the importance of higher education, the importance of going into debt to get your degree. And then at the same time, that's your number one asset. It's holding so many people back from buying a home, from living their lives, from doing things, investing their money. Yet at the same time, it's keeping the government rich.
Wow.
This is where, you know, that mindset, you have to start thinking a little bit differently and start asking questions to the status quo, to the system, to the way things are done. And, you know, if you're like me, you're gonna get a little angry. You're gonna get frustrated because you're gonna realize, what the heck? Why are people not taught this? Why are we not taught how to use our money? Because nowadays, people are paying $50,000 a year to get a good college degree, but at the same time now, YouTube is decentralizing education.
Free.
For free. And you can learn from anybody you want. If you don't like the way that I sound, hit the X button, go to somebody else, right?
Exactly.
And it doesn't cost you a penny. You can learn from anybody, people who are actually doing what they teach, and you can learn from the comfort of your home.
We've got a few really important ideas. So one, there's a saying, the hidden tax, as you call it, which I love that idea. So you've got inflation. Now the government is trying to help you. I'm not even going to say that there's anything sinister. They really were just doing their best.
Sure.
We got hit by the pandemic. Who the hell knew what the way out was going to be? They work with the Fed. They pump just a lot of money into the system. So we end up having what was looking to be the greatest global depression since the Great Depression in 1929. But it only lasts for 2 months because we end up injecting all this money into the system.
Right.
So cool. The catch is that the way to get that into the system, it can be give people money directly, which they did, but the people that really need it, they're going to buy groceries. So it doesn't, they're still trading time for money in essence, right? Because they haven't broken that cycle. If the government's not giving them money, they don't have anything. Then you've got people, I'm talking averages here. You've got the middle class, they're going to Louis Vuitton. Oh, word, like I've already got my groceries taken care of, so now I can go buy that handbag that I want to do a little Instagram flexing, whatever.
Right.
So they didn't help themselves out. But then you've got the wealthy or the educated. That's probably a better way to think about it.
Yep.
You've got the financially educated. Because they're educated, they owned assets already, which is the easiest way, the traditional way for the Fed and the government to pump money into the system is to buy assets. So they're going to buy these bonds, just to keep it really simple. This is overly simplified, but they're buying these bonds. So now you've got people like me who was not a good investor, but I can afford a money manager. And so the money manager's like, yo, you need bonds. Not now, this was before. So I buy the bonds. So hey, now I'm backed by the government because they know that they can print money out of thin air. So now I'm getting this return on my money. My money's protected. Instead of being deflated, they're buying my assets. So now I want people to know the wealthy, some of them, myself, because I was not financially educated as of 2 years ago. I'm only just now getting that way. So I've been a good entrepreneur, a bad investor. But because of that, like the system is I'm learning about it by asking all these dumb questions, and I'm really seeing how it works. So it's not like I was doing something nefarious for me to get richer during this time. It was just like, oh, I need assets, break the time for money equation. I've got all this risky money in building my business. I wanted a more sure thing. So then the bad thing happens, my sure thing gets taken care of by the government. And now it's like, oh, it looks like, the rich are getting richer. It's just education. So now getting into money habits, the other thing that you talked about is while your friends were spending their money at a party, you're spending money on building a business.
Right.
Like that fundamental difference of spending it on fun shit that goes away or equity, in this case, your own company, is a world of difference.
Yeah.
So I just want to anchor everybody back around to those like money habits. You've got what my mom would have called pissing money away, right? Literally in alcohol.
Yeah.
You're just pissing that money away.
Yeah.
Or putting it into something that's going to go to work for you. In your case, it was a business, it was real estate.
Yeah. And
if people can just grab that fundamental difference, like of, hey, start thinking about the world in this different way, they're going to be a huge step forward.
And it's all a learning process because I don't drink, I don't smoke, I never drink. But for me, it was a hustle, right? It was the only way that I knew to kind of start making some money. And so it's how you start and you learn. And each one of the things that you kind of do, you're going to learn something new and you're going to be able to apply that to the next thing. And it really is that shift. I call it the minority mindset, thinking differently than the majority of people, because it's doing something different. Most of us are taught just to be consumers.
Yep.
We're taught
trade time for money, go buy cool things to flex.
Exactly. And that's it. We're never taught to do anything else. And think about the last time your teachers taught you about the importance of investing your money.
They don't know how to do it either.
Exactly.
They couldn't hope to teach me.
And so that's where you have to be willing to go out of your way to learn how some of these things work. Because if you don't, you're just going to be a pawn in the system. And it's very unfortunate. It sucks. And this is where I'm trying to help provide that education, because these are things I never grew up learning. These are things that I wish somebody would have told me. I see it in so many people. I used to guest teach in Detroit public schools.
Whoa.
And these are good kids from rough areas. A lot of times don't have two parents in the home, sometimes don't even have a parent in the home. There were some kids he didn't have, or his mom is not around. He was raised by a gang just because there's no parents. And so they provided him shelter. And it's crazy because you get stuck into a system, a cycle, because you don't have any way of learning or seeing anything else. And like one of the first times I was there, I asked the kids, how many of you guys have a job? Most of them raised their hand. Most of them have an income. And they're in high school, right? They're going to school and they're working. And next question is, how many of you have a bank account? Nobody. Not a single person had a bank account.
Jesus, man.
And so I was like, what do you do with your money? They said, we get a check, we go to the liquor store, we cash the check. Now the liquor store owner is going to take 1 to 10% of that check.
Oh God.
And then what are you going to do? You're going to buy candy, you're going to buy pop, you're going to buy a bunch of dumb stuff on your way out, and now you're left with only half of your check. And now what do you do? It's this, I like to call it net zero thinking, where if I have cash, I need to spend it. I have $500 in my bank account, I got to make that zero. If I have $1,000, I got to spend it. Because we think, oh my God, if I had 10 grand, I would go on this nice vacation. If I had 50 grand, I would buy this car. We think in terms of, it's that consumer mindset of, if I have this money, I need to spend it. But this is where we have to break out of that and understand, what can we do differently? And instead of just spending all of this money, and it's much more difficult now because of the higher cost of living, but it's so much more important now than ever, where you got to create this margin. I call it like an equation where your wealth is really, you take your income minus your expenses, and that's equal to your investments plus your savings. So you take your income, whatever money you make, you subtract your expenses, your houses, your home, your clothes, your car, whatever your expenses are. And if you have some money left, either this money is going to be saved or it's going to be invested. Well, if you have some money left, you're already, doing something that a lot of people are not doing. You're more than the majority of people. Right now, I just read a study yesterday. 7 out of 10 Americans across the board are living paycheck to paycheck. 50% of Americans that are making $250,000 a year are living paycheck to paycheck.
That's crazy.
It's not how much money you make. It's what you do with the money you make that is so important. And so now, if you have a buffer, you're already better than the majority of people. Now the question is, what do you do with it? Well, we're taught, save it. Save all of it. So your investments are zero, And your savings, you're trying to grow that, thinking that you're going to become wealthy. But you're never going to be able to outsave inflation. Your savings are literally making you poorer each and every day. However, you don't want to just not save any money. You got to be strategic with it. What I like to say is there are 3 reasons why you should be saving money. You save money for an emergency, have somewhere between 3 to 12 months worth of expenses, depending on your risk tolerance. Save money for a big purchase. You want to buy a car, you want to buy a house, you need some cash to do that. Save money for an investment. If you're not saving money for one of these 3 reasons, you are saving your money the wrong way, and it's making you poorer each and every day.
Now, you didn't say save for retirement.
You invest for retirement. You talk about retirement, we're about to face a big retirement crisis, because traditionally retirement was what people like to call a 3-legged stool. You had your Social Security, you had your pension, and then you had your own investments or your savings, what a lot of people like to do. Well, pensions are something you only read in history books anymore. They're a thing of the past. So those don't exist anymore. Social Security is running into a very, very, very big dilemma, because right now, if you are, under the age of 45, the Social Security money that you're paying isn't going to go to fund your Social Security income. It's going to fund somebody else to retire, because the Social Security program has much bigger expenses than income. And so it is on the path of being completely dried up, of just running out of money.
Is this because the younger demographics are just a smaller cohort than the older, or?
There's a lot of reasons for it. It's how the Social Security money is spent. It's how many people are requiring Social Security money, how long people are living for, how long these Social Security checks have to go out for. A lot of bad calculations, bad investing. And so the Social Security fund is now drying up. And so now everyone says, well, I'm not worried about it, because the government can just print more money and do bigger Social Security checks. That's what we're seeing this year. We saw between 2021 and now, the biggest Social Security raise ever is between 5 and 6%, something in that range, which one is already not keeping up with inflation. So yeah, you got a bigger Social Security check, but oh no, it's not buying you as much as you could have last year. But then the second issue is, just think about that for a second. If the government is gonna print more money, which means the Fed is gonna print money, give that to the government to give you bigger Social Security checks. What does that mean? You got a bigger check, great, but now the cost of things have grown even faster than the growth of your check. You cannot outprint inflation. It just creates more inflation. And so, so you had the pension that's essentially gone for the vast majority of people. Social Security is not going to be able to fund your retirement, which leaves people with the third stool, which is your own investments. Now, traditionally, you say, I'll save some money, save 10% of your income. That's not going to do it. Your savings are going to make you poorer each and every day. And the second thing is your 401k. And, it's a great start for the average investor, because now it is like automatic putting a little bit of money into some investments. However, your 401k was never, ever, ever intended to be your sole investment plan. The founder of the 401k even came out and said that the 401k has gone awry. It is a monster, because now so many people are hoping that they're going to be able to rely on their 401k to retire. And that's not what it's intended for, and it will never be able to be enough for you. And so a lot of people have this false hope that, okay, yeah, whatever, Social Security will give me a little bit extra, but my 401k will take care of me. But that was never the plan. And so now what does that mean? Your 401k, just think of that like as if you invest in your 401k, your IRA, that is the absolute base. Your savings are not going to do it. This is where you have to go out and invest yourself. And that's where, oh my God, how do I do that? We're never taught how to do this. We're never told how to do this. We're never given direction on how to do this. So you have to be the one now to go out of your way to start learning this. And thank God for YouTube, because now we've decentralized education. But the question is now, you have to be willing to do it, and you have to understand who your teachers are. Because there's crap on YouTube. There's also good stuff on YouTube. And we're never taught how to learn. We're usually just taught what to learn. So now we have to be willing and go out of our way to become smarter, to start learning and understand how do we learn the right things and then apply it. Because the downfall with investing is it's risky. You got to be willing to get punched in the face. You have to be willing to lose money, because it's a part of the process, and it sucks. It sucks losing money. I made a video on my YouTube channel, Minority Mindset, where I went over my worst real estate deal ever. And the reason why I made it is so you can see, look, every real estate investor has got at least one bad deal. And to date, that's the only deal that I've ever lost money on. And I'll walk you through every single bad thing because everything that could have gone wrong, went wrong, plus a whole lot more. And it was one of the biggest headaches of my life. But my goal is, yeah, you can laugh at me, make fun of me, but you're going to see like, holy cow, things can and will go wrong. So just anticipate it, because it's your real life tuition. You got to be willing to learn. And it's a price to pay. And it's one of those things where, just like with entrepreneurship, everybody wants to be successful as an entrepreneur. Everybody wants to be rich. But how many people are going to be willing to get punched in the throat and keep going, keep getting back up and keep doing it? It's very difficult, which is why, not everybody should be an entrepreneur. Try it, but it's not for everybody. But everybody can work to own this equity, right? This ownership, these assets, and everybody needs to.
How much did you pay for your first share of Ford Motor Company?
$2.
So this is what I want people to hear, and I'm glad it's coming from you. I was very honored to have Wall Street Trapper on as well, because I want people that are, I know minority in the name of your program isn't about being a literal ethnic minority, but it's about thinking in a new way. But having people that are minorities, at least in this country, say like, hey, if you do the right things, you're going to be able to change your circumstance. What do you say to people that either think, well, it's okay for other people, but for me, either because I'm poor or I'm a minority, it's never going to work for me?
So I'll kind of give you the story of my family in that sense, because the reason why people come to America is because of opportunity. You have the opportunity to own something, own a home, potentially own equity in companies, build your own company. You have the opportunity to build something, which is something that you can't do in a lot of other places in the world. My grandparents were refugees. They had some land, and in 1947, the state of Punjab was severed. And when that happened, if you were a Sikh, which is the religion that I am, and you're on the west side, either you migrate east or you're going to be killed.
Whoa.
So now my grandparents, literally, all they had were the clothes on their back and a sword in their hand, and they ran. During that process, my grandfather was attacked, and he had to literally fight for his life. He saw his uncle get his head chopped open in front of him, put him on a horse, and that was the last time he saw him. He got to the new east side of Punjab in India, and didn't even have shoes on his feet, didn't have a place to sleep, had literally nothing. Now, from there, you got to start, right? You got to start now all over from scratch. And there's a lot of political issues, unfortunately over there. And so that's when my parents, my dad, my mom were like, we want to get out of this country. We want to go somewhere where we have better opportunity. Come to America, where don't speak the language, don't know the culture, don't know the people, don't know how life is. I mean, India is a very different world. It's a beautiful place, but it's very different than here. And you start over. Why?
As a minority.
As a minority, just for the opportunity, because that's all, there's risk, but you see the opportunity there.
And do you think, looking back now, do you think that, I often think that what we refer to as being an ethnic problem is actually just, there is an element of what I call school of fish. Like you're going to group up with people that look like you. It's just so embedded in the subconscious. But I think a bigger thing is just, it's either majority or minority, right? Because globally, the Indian ethnicity is massive.
Billions, yeah.
But when you come to the US, now you're a minority. Do you think that the trade-off of going from being the majority ethnicity, I mean, everybody in India basically shares the ethnicity. I know there's religious differences.
Sure.
But then coming here and being a minority, does the opportunity that America provide outweigh whatever detriment there is to being a minority?
Again, if you're willing to work, you have to be willing to work and kind of just break out of whatever. Anytime you see a majority kind of just groupthink, you have to be willing to question that. But, the opportunity you have here in America, is it more difficult now than before? Absolutely. Is it more difficult for some people than others? Absolutely. However, it's the best opportunity you have in the world. And, that's why literally, even until today, you have people that are willing to risk their lives to come to this country. And I mean, actually risk their lives. And so, you have that aspect. And I can speak for me where Sikhs, the religion that I am, they are a minority in India. And, there's a lot of issues that come with being a minority anywhere. But again, where do here you have more opportunity than anywhere else. And so the way I look at it, for me personally, So my parents came to this country with next to nothing. So I got nothing to lose and everything to gain, right? And so this is the place where that opportunity exists. But now you have to be willing to work hard, but you also have to be willing to work smart. I can't stand when people say work smart, don't work hard. But to me, that's all complete
Because
crap.
you have to do both?
You have to do both. Because if you're not willing to work hard, your smart working is effectively worthless. You have to be willing to apply both together. And I had none of this, financial education, right? For me, it was, Dad, I want to go invest in real estate. You're stupid, go become a doctor. I had to do all my entrepreneurial stuff in secret. My parents didn't even know that I was doing this business stuff until I was on the news. I was running a different sock company. And this is now, a couple of years after. And we were doing well, and we got featured on the local news. Now my parents got a call from a family friend. And it said, oh, we saw your son on the news. And my parents were like, oh God, what did he do now? And they're like, no, he has this company, he's doing really well, they're growing. My dad was like, what? And so now, he sits me down, he's like, what the heck is going on? And that was the first time they were like, okay, you can actually do something with this, right? And it was like, you have to, for me, it was like, I understood what I wanted. I knew that I saw this like really, I wanted to achieve success. And I knew I was doing it for good intentions. I knew I didn't have like bad intentions with what I wanted to do. But the question was, how do I get there? Because it was like, if I try to convince my parents, it is like, it's going to be extremely stressful for me. I'm going to stress them out. It's just not going to work. So I'm just going to try to figure it out myself. And if I fail, well, guess what? I'm in school. So I kind of had that backup. But for me, I went to law school as well. The problem was I wasn't the best student in school, in law school particularly. I did well on the bar exam. I loved learning. And so for me, I knew I needed to pass the bar. And so I studied hard and I actually did really well. But in the classes, I was not very good, except for the couple of the business ones because I really enjoyed that. But for me, it was just like, I just need to get the degree. That way I can be done with this. Because I went to law school because my parents found out that I wasn't going to be a doctor. They're like, you got to at least become an attorney to keep pride in the family. And so I was like, all right, well, if I go to law school, I can go to law school part-time. And if I go to law school part-time, I can work on me and my business full-time. So that was my mindset with it. And, but I knew that, if I graduate law school and things don't work out, I don't even know how I'm going to work as an attorney because I have no idea. I don't know how to file a lawsuit. I have no idea what to do. So if I graduate, I'm going to have to start all over and figure it out after I'm done. And it used to give me a lot of anxiety, but I was like, this is why I have to figure it out. It was a mission because one, I wanted to give back to my family and myself. And second, I wanted to do it because I wanted to prove a lot of people wrong. And I remember when I used to talk about this, everyone's like, oh, you shouldn't do it out of spite. Don't do things because you want to prove someone wrong. I was like, you don't understand. You don't get some of the things that you hear, the things that you see. And sure, maybe it can't drive you forever, but it can take you, that pain of seeing the things that people say to, because, in between, I started a sock company. And when I was doing the sock business, this is when, people started to be aware that I was an entrepreneur. And I wasn't super successful. I was doing okay. And that's when I got on the news. But, just think about this. I was supposed to be a doctor. Now here I am selling socks on the internet. And everybody is like, oh, so you left, this idea of becoming a doctor. Now you're just selling socks. And, hearing that for years, it's like, one day I'm going to have your kid want to work for me. And that was in the back of my, I never said that, but I was in the back of my mind, your kid's going to want to work for me one day. And it's like that driving force where I knew I'm going to prove this person wrong. I'm going to make this person really see that, hey, I am worthy. I can do something. But it takes a lot of work, going back to that. But with anything, being willing to try, being willing to take risks, being willing to make mistakes, and being willing to learn from it. Because, like I said, for me, I was willing to be dumb or stupid. I never saw that risk until more recently, because for me, it was just I know this is what I want. And so the risk really was never even on my horizon. If I had a business idea, I would start it that same night. Because for me, it was I want to do this. I want to figure it out. Books were kind of giving me an idea. My teachers weren't teaching me this. I don't know who to turn to. My experience was my teacher. That's how I learned how to be an entrepreneur, how I learned to start investing. That's when I started learning about money, because, the whole issue with the money stuff, this is something that we're never, ever even remotely taught about. And it's now becoming a real pressing issue.
You have to be willing to try, learn, risk failure. You are going to fail. I always try to get people to understand that failure is the most information-rich data stream that exists. It sucks, it hurts, it can be costly, but one, in triggering the parts of the brain that have to do with pain, you trigger the parts of the brain that have to do with memory and focus. So you're more likely to really look at that thing that you don't want to happen again to figure out why that happened,
right.
memorize it, and then you're going to get better the next time. And to your point about having a chip on your shoulder and people telling you that you can't do something and thinking one day, you know, your kid's going to ask to work for me, it probably is a primary driver over an extended period of time. Like you said, it'd be a little caustic to the soul. But it's so powerful in terms of, so you've got light energy and dark energy, right?
Yeah.
Just to be like all Star Wars about it. And if what I have found in my own life is that the hardest times, the light energy will only get me so far, and then I'll hit a brick wall and I'll want to stop. And it's only when I tap into the dark energy of like, I will not let this person be right about me. I am not going to back down because I know they're just waiting for me to fail. That it actually does give me another boost. Now, I try to split it, call it 80-20, where I'm spending 80% of my time in the light, the beautiful things I want to do, the people I want to help. But dude, let me tell you, 20% of the time, I'm thinking that the person that really wants to tap dance on my grave.
It gets you going, right?
Yeah, 100%.
And you know, I found the same way, because for me in the beginning, it was just figuring it out. I went from business idea to business idea to business idea, because for me, I was just trying to figure it out, hopping from one idea to the next. But then, you know, you talk about the light energy. For me, it was really driving my passion and my mission and my purpose. And that became more of the light energy, because now, you know, after a certain point, you're like, the money doesn't drive you. It just is what it is, right? It's just like, I'm fine. Like I'm not a very materialistic person. I don't really care, you know, about brand names, designer names. The first time I made $1 million, I was driving a $500 car, right? It just doesn't matter. Like, sure, it provides some sort of benefit, more comfort, more value, but after a certain point, that money is not a driver. It's now, what is my purpose? And for me, you know, that minority mindset, where Rich started making videos, I wasn't doing it to make money. I did this as a hobby because I got scammed in that sock company. I'm just talking about things that, you know, I wish somebody would have told me when I was younger, like having to do with business, having to do with money. So I did it as a hobby. And people will say, you can't just do that as a hobby. I'm like, dude, you don't understand. I didn't invest any money into it. I was making videos off my phone. I bought like a $30 or maybe $35 tripod off of Amazon. And I was just making videos for fun. And like, my friend asked me, and I think I was around 10,000 subscribers. And he asked me, he's like, how much money are you making off of YouTube? Like, what do you mean? He's like, how much money are you making from your ad revenue off of YouTube? I don't know. What do you mean? He goes into my YouTube backend with me. And this is before YouTube had requirements of like, you gotta have X number of videos, X number of subscribers every time. Anybody could monetize any video. He's like, dude, you haven't even turned monetization on. Click one click and now you can start making money off your videos. I was like, oh, I didn't know that. I really enjoyed it. For me, this was like really fun and something that I loved doing, which is why I did it. And then Minority Minds started to grow, started to make some money. And I was like, oh, I can actually like do this. Like I can work on just spreading this purpose. Well,
what is it about what you guys publish that people respond to?
It's one email, right? It's a newsletter. And you know when it's coming, what time it's coming. You know where it's going to be every day. And so people want to open it. We don't need to have the world is ending. You know where it is. And then we just break down what's happening in the stock market, the real estate market, the crypto market, what's happening with inflation, what's happening in the global economy. And then if there's anything else, we'll add that in there as well. And it's super fun. And so you can avoid that headache, avoid all that, you know, spending hours. And now here it is in a fun, ready to read email.
And what should somebody that in this environment, they want to pay attention, they want to make the right moves, they've listened, they know that you bought your first stock for $2. They know that no matter what they look like, they need to be changing their behaviors, that they need to find assets. Like in this uncertain time, where should people be putting their money? I know there's no one size fits all.
So I'll tell you where I invest my money. I invest my money in 5 places. My business, market briefs, and other startups. I invest my money in real estate, invest my money in stocks, invest some money in cryptocurrency, and invest some money in physical gold. Now, I don't recommend you go on and just start putting your money everywhere. Start with one place.
How'd you pick those 5 and how do you allocate what percentage?
So giving a percentage will be hard because valuations change all the time. But I have been less and less actively before my active investment, main one was real estate. That was the thing that I loved and the thing that I really understood. So anytime I had extra cash, I would go out and buy rental properties. But now I'm doing less and less of that so I can have more money to invest in my own company, Market Briefs. But now what I do is, out of my company's minority mindset, I pay myself a salary. Out of that salary, pretty much all of that gets passively invested. It gets invested into stocks, crypto, and physical gold. So what does that mean, right? Well, in stocks, I have a system where every Wednesday, you can pick whatever day, it doesn't really matter. But for me, it's Wednesday. My money is automatically pulled out of my bank account and it's invested into a few different ETFs. So an ETF is an exchange traded fund, and you could think of it like a group of stocks. So instead of going out and investing in Amazon, one company, and then hoping Amazon grows, you invest in a group of companies. Like some will give you exposure to 30, some will give you exposure to 500, some will give you exposure to thousands. There's a bunch of different ETFs out there. And there's ETFs for a bunch of different things. Like one example that I invest in is the S&P 500 ETF. The S&P 500 is a group of the biggest 500 companies on the stock market. And so when you invest in this ETF, you're literally or indirectly / directly investing in the biggest 500 companies on the stock market without individually investing in all of them. You invest in one ticker symbol and it gives you exposure to all of them. So you're in essence investing in the companies that make America, America. You're investing in America. You can invest in specific sectors, technology, healthcare. You can invest in companies around the world, emerging markets. And so you can find these ETFs, again, Google search, YouTube, you'll find kind of the things that you'll see what you're interested in, buy what you're spending your money on. And so that's one thing that I do. I have a few ETFs. Every Wednesday I'm buying that. And then I have my cryptocurrencies. So for me, I think cryptocurrency is going to have a lot of value in the future, but I also believe it's going to be very volatile. I think we're going to see a lot of, just like anything else, there's a lot of dumb money in crypto. And, anytime you have all this money that was printed, right, money's going to want to go to dumb places. And so I think that we're going to see some cryptocurrencies go under. And again, what is that going to do? It's going to create panic. It's going to create volatility. It's going to create fear. So, especially when the newer asset class, you have to be willing to understand that and withstand that. And so, I understand that, I'm not the most educated person in crypto, but I understand the basics. I believe in the value of the blockchain. So I invest in Bitcoin, Ethereum, and a couple of the smaller coins, the things that I believe in. And that's happening every day. And then I invest in physical gold. Every month, I have some cash going to buy some physical gold every month. And so this is happening on autopilot. It's automatic, it's passive, and it's consistent. And it's just a simple way for me to invest, because what a lot of people try to do when they invest, they say, I'm going to invest in the stock market. Okay. Either, when times are good, I'm going to try to find the next hot stock, the thing that's been rallying like crazy. Everybody's been making a ton of money on it. So I come in and buy, and that's when it starts to go down. And then they get scared, they lose money, and then they sell. Or when times are bad, they say, I'm going to buy at the bottom. I'm going to wait for that perfect time to come in and buy. And this happened again in 2020 in just textbook form, because the market started collapsing. And it was the fastest collapse that we've ever seen in the markets, even faster than the Great Depression.
Whoa.
And so what I was saying was on YouTube, I said, look, here's what I'm doing. I'm buying. I have the companies that I like, because my ETF strategy is happening passively, but actively, I'm also picking and choosing what I want to buy. I already knew which companies and stuff that I wanted to own. I'm just waiting for a good entry point, a good price to buy. So what I said was, look, when things fall by 10 to 15%, I buy. When it falls by another 10 to 15%, I buy more. When it falls by 10 to 15%, I buy more aggressively. I just buy on the way down in phases, because I can't perfectly time the market. And anytime I said that, it was just a flood of comments, people saying, why would you want to buy now? The whole market's going to implode. It's going to go way lower. Just wait that we can get a better buying opportunity. And I said, I can't predict the bottom. That's not my game. I'm not trying to time the market. I don't got a crystal ball. And then what happened? The Fed opened up the money printer and they did something called unlimited quantitative easing, which is something, we've never really seen before. And so they just flooded the economy and markets with money. And now you had the market, the fastest collapse ever. And then you had the fastest stock market rally in the history of time. And it was like, no, I couldn't predict that. I don't know who could have. But if you were waiting to time the market, you missed the opportunity. And the people that weren't trying to, and you just, you wait for the good entry point, you're buying, even when everybody's scared, they were the ones that were able to make a lot of money very quickly, way faster than pretty much I could have anticipated or anybody could have anticipated, just because you understood, you buy in phases.
That's my disclaimer. So don't sue me. But I like these like ETFs, right? Where you can buy, like, I'll just throw one out, like SPY.
Yeah.
You're basically buying a little piece of like all of the top
500 companies.
in the US.
Yep. SPY gives the exposure to the S&P 500, the biggest 500 companies in the stock market. And it's just your way to invest in the American economy. If you believe in the American economy and you think that in 10 years or 20 years it's going to be stronger than where we are today, then what you can do, you just buy a little bit of it every week. And now if the market goes up, you keep buying. If it goes down, you keep buying. You don't change your strategy. And so it just gives you the opportunity to kind of buy more at a lower price. It's just on sale. So this is where you have to be able to control the psychology, your emotions, and know your strategy. And they can become extremely difficult during downturns because
everybody wants to pull out.
But
that's where the money is made for the people who hold.
Exactly. And you have to be willing to now make the right, because you don't want to buy into bankruptcy.
What was that? There was a great book called 100 Baggers.
I'm not familiar with that.
Have you read the book? Well, basically, like, you could 100x on, there are some stocks that historically have offered 100x returns, but you have to weather profound dips to get to that 100x. And most people, they just don't have the courage to weather, or the stomach to weather those dips.
Amazon went down more than 90% during the 2000-2001 dot-com bubble bursting. It takes a lot to see your investment portfolio go down 10%, 30%, 50%, 70%, 90%, and keep holding or even potentially buy. So it's not easy, especially when competitors or similar companies in that space are going bankrupt left and right.
Yeah.
So, that's where, if you're going to be investing in individual companies, you have to be willing to put in the work. You don't want to just keep buying into bankruptcy, but an ETF lowers some of that risk. And then you could just own a piece of generally the economy, and you just keep buying on the way down. And then as it keeps going, you just keep buying. You're just working to accumulate more shares. And then if you have particular companies you want to buy, you buy them in phases. Buy it on the way down instead of trying to perfectly time the market. You do not want to try to time the market. Instead, just look for the opportunities.
I've always heard, tell me if this is true, time in the market trumps timing the market.
Yeah, I think Warren Buffett
said that. Good way to think
about
that. Oh, did he?
I think Warren Buffett said that. And I think, I agree. I mean, at the end of the day,
you just keep your money in there. Don't even think about it, basically.
Yeah. I mean, a lot of people ask, is this the time to sell? If it's going to go lower, should I sell now? And again, I'm not a financial advisor. I'm not here to tell you what to do. I'll give you my advice. I don't sell unless there's a reason. And what is that reason? Even if I have a better place to put my money, or if I think that this asset, something's wrong with it, maybe the company's going to go bust or something's wrong with the underlying asset, or if I can get a better return somewhere else, I find another opportunity. If I'm not looking at retiring, if I don't need this money in the next 5 to 10 years, and I'm just going to sell because I'm worried about the economy, then I'm doing the wrong thing. I'm just holding. All I'm trying to do is accumulate more, and I'll sell if I have a reason to sell. If there's no reason to sell, I'm just going to keep holding and accumulating more.
Yeah. And also you should probably have a great deal of understanding about the asset, right? Like, don't invest in things that you don't understand.
Yeah. And the best example right now is cryptocurrency. I'll give you my opinion. I like crypto. I invest in crypto, but I think there's a lot of crap in crypto. And what does that mean? Well, people were hoping that everything could be a get rich quick type of system where if I can put my money in any of these coins, I'm going to be able to 10x my money essentially overnight. And I've talked about this many times where I'm like, look, I believe in crypto. I think there's a lot of value in the blockchain technology, but you have to believe in it, and you have to be willing to withstand the storms, because you're going to see a bunch of booms, a bunch of busts. You're going to see crashes. And what happens with that? Well, you're going to see the growth of scams. You're going to see the growth of crappy coins. And once the free money starts to go away, that's when the tide goes out and you see who's been swimming naked. And so that's when you're going to start to see some of the coins go bust. And as soon as you see those prices go down, because it's going to hurt the whole sentiment of the market, that's when you're going to see people turn. The people who loved crypto, hope they'll get rich, will hate it. And then you're going to see this massive change. And you have to, again, you got to understand what it is. You got to love it and you got to believe in it. And, and of course it's risky. I understand that it's a very speculative investment. And that's why it's a part of my speculative part of my portfolio. I invest my money in 5 places. I invest my money into my own businesses. That's my number 1 investment. And startups that I invest in. Number 2 is real estate. Number 3 is stocks. Number 4 is in crypto. And number 5 is in physical gold. So crypto is my second smallest investment. It's in the speculative side. But I'm not going in and investing in a bunch of random coins. I'm investing my money into the coins that I understand, that I believe in, and I'm going to hold on to them for the long term.
You invest in startups. Isn't that super high risk?
It's very high risk. Now, why do I invest in startups? Well, because I am an entrepreneur. I feel like I never really had a lot of support as an entrepreneur. So it's a way for me to support other entrepreneurs. And I love working with entrepreneurs. I love the whole idea of entrepreneurship. So startup investing, extremely risky, high potential return. 9 out of 10 startups will fail. That's what the numbers say. But for me, I enjoy it. It's something that I like to do, and it's become much more accessible for people nowadays thanks to crowdfunding. There's platforms out there that let you do it with as little as like $100, maybe even $50, depending on the platform. But you got to, again, with anything, you got to understand the risk. And if you're willing to accept that risk, then it could be something for you, but you have to understand the risk.
You have to understand the risk. I feel very grateful that I get to invest in startups, and I invest in startups that I believe in, that I want to help further. Like Element, it's an electrolyte company that I use their product. I invest in like a baby food company that like makes the baby food that if I had a baby, that's what I would be feeding the baby,
Yeah.
So
it's purposeful investing.
Purposeful investing. Yeah. Investing, with a purpose. Okay. What does your daily routine look like to set yourself up for success? Because you're obviously super successful. You've got this huge social media platform. You're smart as hell. Like you've got all this knowledge to drop.
I don't know about all that, but I appreciate it.
Yeah. But tell me about your daily routine.
So my daily routine right now is a little bit different because I'm in California and I'm based out of Michigan. So I'll kind of give you both. But what I like to do is I like to start my days with some sort of like walk or some sort of like where mindful, calming meditation exercise. I love exercising. When I'm not a big like the meditating sitting down, but for me, walking is meditation. So what I used to do in Michigan, and I don't do it as much here, and I'll explain why. But in Michigan, I go on a hour and a half walk in the mornings, about 5 miles, and I listen to an audiobook. And it is my way of just being alone, and I just think, and I listen to my audiobooks, and it's one of the most peaceful things ever. And I started doing this during the pandemic because the gyms were closed, and I just kept up with it because I learned so much from my audiobooks, and it just gives me that opportunity to just let my mind go. It's the only time that I have.
All finance related or like different topics?
Anything. I really have been getting into biographies a lot. I've been listening to just tons of biographies from entrepreneurs to investors to just anyone who's done something. It doesn't have to be an entrepreneur, but I like biographies. After that, I'll get ready. I'll go to work, to the office, and then I'm there. Depends, but I could be there anywhere from 6 hours to 12 hours, depending on the day. And I try to go to the gym in the evening. And after the gym, then I come home and I might do a little bit more work later, depending on what is going on. But I'll try to do less work then, and then spend just some time with the family.
How much time in a given day do you dedicate to looking at, tracking, analyzing the markets?
Oh man, so I spend a lot of time doing that. I don't know how much time I dedicate every day, but it's a big chunk of my day. And that was actually the reason why I started Market Briefs, because I make these YouTube videos on minority mindset, and I talk about money management, investing, and these are all things that I wish somebody would have told me when I was growing up. So I started it as a hobby, and now it's grown into something so much bigger. But as things started, craziness started happening in the markets, I started talking more about current events type of stuff just because people wanted that. And it became very overwhelming for me to keep up with every single news source. So I had some people on the team. I said, look, start putting together like a daily email for me, like what's happening in the markets. That way I can get like a summary and I know what to look at. So started doing that. And I was like, this is kind of cool. I wonder what would happen if I just started like telling the audience about this and kind of did like this a little promotion, like, hey, we have this newsletter for under Minority Mindset. That's what it was under the time. And people really enjoyed it. And after a while, I was like, this is like, we could actually turn this into like a business. Like people like our newsletter. We're, spending more time into it. Let's try to turn this into something. So that's when we turned this newsletter under the Minority Mindset name into Market Briefs, into its own financial newsletter. So, I start with that, but then I spend a lot of time just kind of going deeper into what's going on because I enjoy it. And then it provides me analysis, not only for what I do, but then also the things that I talk about. So if it's not me and there's people on my team, this is what we do, right? So I spend a lot of time on that.
Yeah. It's like financial markets, also real estate. Is that?
Real estate, stocks, crypto, what's happening in the global economy, inflation, just general economic stuff. So yeah, a lot of different sectors in that sense.
Tell me about real estate. Is now a good time to buy a house or?
So I'll give you my opinions on buying a home because I don't look at a home the way most people do. I look at a home like buying a t-shirt or a shirt. I will buy a shirt if I can afford it and if I like it. If I'm going to buy a home to live in, I'm buying it for the memories. I'm not buying it for, what can this home be worth in 5 years or 10 years? I think that's the wrong way to look at a home because I used to be a real estate salesperson. When I started investing in real estate when I was 19, I was like, I don't want to keep working with an agent. I want to do it myself. So when I was 20, I got my real estate salesperson's license and I started helping people buy and sell homes. And the whole pitch is you're helping somebody buy the biggest investment of your life. And I don't like to look at the home that I live in as an investment because when you look at it as an investment, it's easier to get you to spend more, buy bigger because it's an investment. It's an investment for your kids. It's an investment in your future. So buy the biggest invest home that you can. And it works because then also you get the bigger home. The real estate agent gets a bigger commission check. The banker gets a bigger commission check because now they're going to give you a bigger mortgage. Again, not every one of these people is bad, but it is what it is. So if you're going to be buying a home, the key factor is not what's happening in the market. It should be, can I afford the home? Affording means, can I afford the down payment? Can I afford the monthly payment? Can I afford the moving costs? And can I afford the new move-in costs? Because when you move in, you want to upgrade their bathrooms, you want to upgrade the kitchen, you want to get the new furniture. If you can afford it, forget what's going on in the economy, go out and buy your dream home. But if you can't afford it, don't go out and buy it. So, at the end of the day, that's why I don't consider your home an asset. Because for the majority of people, your home is a money pit. And then you hope that you can sell it for profit. But home prices don't always go up. We saw that happen in 2008. And I don't know where home prices are going to be in 5 years. Maybe they'll be higher, maybe they'll be lower. I don't try to predict that. Even when I invest in real estate, I don't care what's happening in the market. When I invest in real estate, I'm looking for one thing, cash flow. I want to see what amount do I have to pay today? How much cash is this going to generate every year from here on out? So if home prices go down, doesn't matter. I'm still getting my cash flow. If home prices go up, great. It's icing on the cake. So I don't really care what's happening in those day-to-day swings. And, going back to the home buying question, I don't look at it like an asset.
How do you get cash flow from a house? Like assuming you're renting it out to somebody?
Exactly. So you're buying a house as an investment. Now you're buying it to make money. You're not buying it for the purpose of living in. So in Michigan, you can go out and buy a home for $150,000 today. You can rent it out for $1,500 a month. And so, it's just a matter of now, how can you find properties that will generate you solid cash flows, cover your taxes, your insurance, your maintenance, your management, and any other fees that arise, your mortgage, and then put some money in your pocket. So now you have the asset that's paid for by itself, and then it's also putting some money in your pocket.
Love that.
Yeah.
Passive income. That's like a big, important, awesome thing to have.
Yeah. And, it's an interesting topic because I would agree that real estate income, real estate cash flow can be passive, but it takes a lot of work for it to become passive. And I'll tell you from personal experience because...
Like if you're going to be a landlord, that no shade against landlords, but like that doesn't sound like it's a job for everybody.
So when I first started investing in real estate, I didn't know what I was doing. I didn't have any real estate investor family members. I didn't know any real estate investors. So I just kind of did it. And what happened was I'd read these books that said it's passive. You need a property management company. The problem was I had a very bad property management company. So I had its tenant in this property, and I would get calls almost every day. One day they were like, we were cutting cucumbers on the countertop, but we missed the cucumber. We scratched the countertop. You need to give us a new countertop.
Damn.
I was like, I don't know what to do in that situation. I got them a new countertop. In one situation, they were freaking out because they said that the property is about to be burned down. Something's wrong with the electrical system. It's just some crazy stuff going on. We sent out an electrician. A bulb went out. It fused. Right? I mean, it was a nightmare tenant. Anything that could have gone, like I hated the idea of being a slumlord. Like it just never was attracted to me. I wanted to be a person that provided a nice unit, above value unit where you're getting a bargain for your price. So what did I do? I found, okay, this area has certain type of appliances. I'm going to put in stainless steel appliances, something better. So I always wanted to, make sure that if my tenants come here, they like it. That way they want to stay for longer. So it's just like customer retention. But I didn't know what I was doing. And so it was anything but passive in the beginning. So then I started working and I started developing my team, started to meet more real estate agents, more contractors, more property managers, people who were actually good. And now it is essentially completely passive for me. I just look at the reports that I get every month. I don't know who the tenants are. I'm not involved in the day-to-day decisions. I have a team that does that. So yes, now it's much more passive. Back then, to get started, it was anything but passive.
Oh man, I once illegally Airbnb'd a place that I was renting, but it was great. It helped me make ends meet back at a time when I wasn't really making that much money. But every time I would get a text or a call from the person who was like Airbnbing my place with an issue, it sent it instantly activated my fight or flight, and it sent my blood pressure through the roof. And it was just so stressful that I was just like, this is not for me.
Yeah, it's difficult, and you have to be willing to put in that work. And that's why, one of the things that I don't like doing is saying you have to do this with your money. You have to invest in real estate, or you have to invest in stocks, or you have to invest in ETFs. There are so many. Look, Warren Buffett became rich by investing in individual companies. You have other people that became extremely wealthy by investing in real estate. There's no one way to do things. I don't like to say this is how you have to do it. This is what's going on. Like,
right.
My whole thing is learn, pick what's right for you. You got to try things. You don't know what's going to work for you or what's not going to work for you. And as you learn, you'll become smarter, and you're going to say either I hate this or I love this.
What's like an easy, what are some like other means of developing passive income?
Well, if it's not real estate, then the next one will probably be investing your money in dividend paying companies.
That's cool.
So on the stock market, when you invest in a company, you're essentially getting your share of ownership and you get your share of profits. Now, if a company is larger and they have a lot of cash at the end of the year, big profits, they can do three things with that cash. They can take this cash and invest it back into the company, open more stores, hire more people, invest in more innovation. They can save this money for emergencies in case we run into another pandemic, or they can give this cash away to investors, shareholders. So if you invest in a company, you own shares of a company, and they have this big cash portfolio at the end of the year, one of the things they can do is just give it away in the forms of a dividend. And this is public information. You can just go onto any stock brokerage website, stock market website, and it will show you if a company is paying a dividend or not. And so what does that mean? If you invest in a company, like just for an example, McDonald's right now, they pay out a dividend. If you own one share of McDonald's, every quarter, meaning every 3 months, they will send you a check for doing nothing except owning that investment. It's your profit share. You don't got to flip any burgers. You don't got to run a restaurant, but you get a little bit of money for owning a piece of the company. So it's another kind of it's a simpler way to get passive income without really having to do any of the work. Your work in this sense is mainly just to make sure your company's not about to go bankrupt.
Yeah, I love it. I definitely will look to see if companies, before I invest in the market, to see if they are dividend paying stocks. Apple, pays a dividend, which is dope. My grandma was a big stock investor, and she was a big like AT&T.
Oh yeah,
AT&T.
Yeah.
I mean, it was a different time, but AT&T is still like one of these like legacy companies that pays a pretty high percentage wise,
right?
Dividend. That's cool. That's good advice.
Yeah, and if it's not that, I mean, then the next way to go would require now a lot more work, because then it's more of, you can invest in businesses. I think everybody here needs to own a business. However, the majority of people should not be in the business of operating a business, and the majority of people should not be in the business of starting a company. So what does that mean? Well, now you can own a business without actually running it, without actually operating it. And one way to do this is the stock market, where you can invest in startups, or you can invest in companies that you know of that need capital. And now what does that give you? Your piece of the profit. So if a company is making $1 million a year and you own 10% of that, well, then you can get your share of that money, right? And it's just another way of you to kind of what we're talking about before. You're not just working to climb the corporate ladder, but you're also owning the corporate ladder, because that's where the real wealth is built. It's built through equity, not just through your salary.
Wow. I love that. God, there's so many questions I want to ask you.
Depression is when more jobs are lost and they're going to have to print more money. Just as they did to prevent when Fauci, fascist Fauci, shut down the U.S. economy, the whole world economy shut down. How can they pay people not to work? America is now the largest debtor nation in history.